Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back. Good morning, good afternoon. Hope you're doing well. You know, I say the same thing every single morning when I start these streams. I have it like down to a science at this point. Also, you just saw in the opener there, past Nick, who put together that, call to action. Just wanted to mention that if you'd like to check out DNA Funded, there is a link in the chat right now and in the description. The promo code to use, we've had some people wondering or not using the promo code. Why would you not use the promo code? You get 10% off. It's A1, write this down, A1T10, okay? You can also find out more information using that link, a1trading.com/prop firms, to find out the ones that we are affiliated with, and you can find out more information there. Okay, what an amazing intro. Thank you. Oh, you like this? Check this out. Is this not super cool? Look. So Chandler made that, and I think it looks so cool. Check out the cat there. That's the attention to detail. Is my cat's name is Luna. See the cat? Pretty cool. Okay, so what do we have going on? Well, we've got about 10 minutes to go before unemployment claims, and we are counting down the main event, I guess, numbers-wise this week, which would be the NFP report tomorrow. So we've got some big jobs data tomorrow. I'm really curious about this report. I have a current position or a couple of current positions that I'd like to discuss with you guys that I'm working with. Some new trades that I took recently. Some things that I recently took profits on, like pound yen shorts. Yeah, really interesting. We'll be talking about all of it. A tree in the background? Yep. Hey, there's a tree. Can you see it? Yep. See, there's a tree. Got the tree right there. Anyways, we've got unemployment claims coming out in just a few minutes. Tomorrow we'll have the big NFP report. But this morning we also got some volatility from the Bank of England's MPC official bank rate votes. Now, the way to read this, I always forget how to read this, but XXX format. The first number is how many MPC members voted to increase interest rates. Second is how many voted to decrease rates. And the third is how many rated to hold. So all nine voted to actually cut interest rates in the UK. So that's the way to read that. It's a little different than how we do it here in the States. But they have their bank rate votes by their committee, and they all voted to cut rates. So probably some rate cuts coming for the Bank of England. That has definitely weighed on the pound this morning. If you've looked at the British pound, it's been down big time. You can actually see that the forecast did actually come true. We did see a rate cut in the UK. And so let's have a look and see how things are playing out this morning with the pound. And you can see, look at that. For my currency trading friends, big drop here on the pound against the dollar. Let's take a look at that a little closer. So you can see here on the 15-minute chart, just been selling. And of course, that's where the actual meeting took place. And you can see the pound just continues to look weak. Like with hindsight in my favor, I should have kept my pound yen shorts open because, oh my gosh, it just dropped again. I closed out. I took profits yesterday on my pound yen shorts. But this is the difficulty with markets. It's like sometimes, you take profits and the market keeps falling. Or sometimes you say, I'm not going to take profits, I'm going to trail stops. You trail stops, the market rips back the other way. When it comes to currency trading, though, it's different. Currencies are different than trading gold. They're different than trading NASDAQ, S&P, silver. Why? Well, because currency trends are fickle. Actually, yesterday, James did a great job on the stream of discussing this topic, specifically the idea that currencies are not, they're an unbound market. They don't have some sort of long-term, directional likelihood. Like if you talk about gold, we all know that in 20 years, gold is almost certainly going to be higher than where it is currently today because it's a market that over the super long term, not necessarily like we could have 2 years of downside for gold, but over the super long term, gold should go up. Currencies are not like that. Currencies don't have a bearing. You go back to scroll as far back as you want, right? We're trading at 1.03. Look, we're at 1.03 in 2003. So this market has not moved anywhere. I mean, it's moved really far in one direction, then come all the way back, and then all the way down the other direction. But you can see where I'm going with this. It's an unbound market. So when I trade currencies, I trade them a little differently than the way I trade gold or an index or something that I have more of a, I'm looking for a directional trend to take place in. When it comes to currencies, there certainly are trends. Like we've still got a downward trend forming here. But this market is by its nature over the decades more range bound over the long term, right? So, when it comes to currencies, I'm a little bit different than I am with indices. I typically look to take profits on currencies quicker, um, and willing to actually add to losers. It's a weird concept because it's very different in the way that's more of a mean reversion style of trading rather than a momentum style of trading where, okay, if I have a bullish idea on the S&P 500, I'm looking to buy it, put a stop on it, and know where I'm wrong. It's just a different style of trading. And I've found over the years, I don't know why my trading view is being so slow. I found over the years that attuning the two markets slightly has really made a big difference. It's actually really improved results for me. I'm not saying you can't trade momentum or trends within the currency market. I'm just saying that over the longer term, the markets are less bound to go up or bound to go down. And that makes a big difference in the long-term kind of expectancy. Like if the S&P 500 breaks out to all-time highs, I view that as a very bullish thing. I'm looking for pullbacks, looking to trade that. In fact, that's kind of where I'm watching on the indices. But we got to prove it, right? I mean, look at the indices here with me. We've got just a few minutes to go before unemployment claims comes out this morning. Look at the indices. They're not really decisively moving anywhere. And yeah, you can say, okay, look, they've had nice drops and then returns and then drops and then returns. I would say that does look very healthy. You've got buy the dip mentality going on hard when it comes to the index, the S&P 500 specifically. But here's my issue with this. I would rather just sit on the sidelines because what if we're just set to roll over on NFP and just keep range bound for a while? What if we go into a period like we did for gold for the last few months where gold did nothing and I could have just been trading the indices, which is exactly what I did. When gold was range bound, right? I was just trading the indices because they were moving well. But now the indices have, and this is markets, right? What was yesterday's performance and way of trading is not necessarily today's. So indices right now, trust me when I say I am interested in buying the indices. I have the signals to do so on a fundamental. What is this? Gold is getting a bullish rating. I need a sound effect. Okay, just block that out, Nick. Don't pretend you didn't see that. The indices, right? NASDAQ, Bitcoin Actually, look, we're losing even the readings. NASDAQ, okay, NASDAQ and Dow Jones, I am loving the upside potential for these two for these two indices. I'm a buyer if I can get the right setup. But the right setup is not right now. I can't justify, like, look, NASDAQ, if you give me this move, boom, okay. If the Edgefinder still has confirmation, I can do that. I can look for that setup. That's a trade I take over and over and over and over and over. I love that trade. Doesn't work out every time, but it's a trade I take every time I can. Look, if we drop down to really big longer term levels of support, then I'm interested in that too, because I would sit through the chop if I can get a good price, but I have nothing to do right here, right now with the indices. Now, can we talk about the elephant in the room? What are those? What are those gold bullish rating on the Edgefinder? Edgefinder, don't do this to me. Don't do this to me. Right before NFP, you can't give me a gold bullish reading. Okay. Look, I don't fight my system. My system's smarter than me, okay? Can I tell you something? The Edgefinder is better than me, okay? You know why? The Edgefinder is not susceptible to emotions. The Edgefinder is a system that does not give two craps about, oh, the market's running off without me. Oh, I'm missing out, right? The Edgefinder doesn't do that. Also, we got news. Sorry, I got really distracted by this. Let's see what happens with unemployment claims here this morning. Expected to be 214K. Let's take a look at the all markets view just to see if we get any sort of market reaction to this. Let's see. Nothing too much here. Dollar index. I'm going to guess that that's pretty much an as expected reading. Okay, pretty much as expected. 219K for unemployment claims. So more people than expected filed for unemployment, but not by a huge margin. So the market's not going to be very surprised or move very much on that. Okay, we can continue with what we were just saying. Look, the Edgefinder is smarter than me in a really key way. The Edgefinder is not a human being. The Edgefinder is straight up just a system. And I absolutely love having this as the core to what I do because, look, I'm the operator, but this is like your fastened seatbelt light in your car or your rear view, like your rear backup camera. If you have one of those in your car, once you have it, it's really hard not to have it. It's so convenient. It's also like you're going too fast, like you're going to hit something, pop up in your car. Think of it as like your Tesla. Like if you had a Tesla, I don't have a Tesla, but if you had a Tesla, it has all the bells and whistles and all the gadgets that kind of keep you informed, right? It's a machine. It's a system. That's at the core of my trading. And nowadays, it's like once you get addicted to an iPhone, you can't imagine life without it. It's so convenient, right? You can order things from your phone. You can navigate from your phone. You can call anyone. You can discuss anything. You can search anything. It's really, truly, the iPhone is an amazing, incredible tool. Well, the Edgefinder for me is the iPhone of my trading. It is the core tool that I can source everything from one spot. And you guys will see me if you sped up what I do on my live streams by 1,000 times, 10,000 times, what you would see is this is what you would see. You ready? And trigger warning. It would be like this. If you like sped up my stream, that's what would happen. Is because I don't go far. It's like a child and its mother, me and the Edgefinder, because the Edgefinder's the mother, I'm the child, right? So I'm looking at this, I'm like, okay, yeah, I want to buy the S&P really, really, I love this idea, but what does Edgefinder say? Oh, it's not there. So curb your enthusiasm, right? But then we have gold, and I've been sitting on the sidelines for gold for a while. And now today, the first time we have Edgefinder bullish confirmation. Interesting. Why do we have Edgefinder confirmation? Well, first of all, I know where the score came from. This put to call ratio, which we talked about, probably cooled off, and it did. See that? We know how the system works around here, maybe because I'm part of the dev team, but look, the put to call ratio was extremely overbought. Signals being printed, basically high call demand when looking at the call to put kind of ratio in the market. So yeah, a bit of a delayed call on gold, I must say. That's a fair point. But again, the Edgefinder is not a technical analysis tool. So the Edgefinder is all this is saying, and let's understand this, is that actually, oh, that's a wonderful point. The Edgefinder is getting bullish here. And you might say, oh, great. Thanks, Edgefinder. You were only 50 bars early or late. I would actually say that this is the type of signal that I want to get from an Edgefinder type tool. You know why? I wanted to buy gold over here and here and here and here. I kept looking at it and saying, look at this drop. This looks great. And you know what? The mother and the child scenario that I just mentioned, that was me right there. I was saying, hey, Edgefinder, how does gold look? And it would say neutral. And I'd say, hey, Edgefinder, how does gold look? And then it would say neutral. And then, I saw it start ripping and I said, hey, what does the Edgefinder say now? Maybe we've got to, don't do anything. And it kept me out of this whole chop fest that was 2 months of period. And you might say, well, it's delayed now. Yes, but it kept me out of several lose. This is the type of scenario, this region, that's where I lose money because I look for breakouts. I put a stop loss. I'm looking for continuation. When there is no continuation, I typically lose money. So the Edgefinder saved me from that environment because it said, hey, there's not a reason to be a buyer of gold at this time. Now, of course, things have changed and we look really good now. And there's a lot of stuff that you couldn't possibly have seen coming, like the way the tariff conversations have been going and the comments about Gaza recently from Trump, like there's stuff that you can't see coming. That's why gold started all of a sudden taking off. It's just a lot of uncertainty. I have not been a big fan of gold because the dollar has looked really strong, right? But perhaps we're getting some signals here. We saw several things this week that may suggest that perhaps that dollar is weakening. And maybe that's really what the Edgefinder is seeking. Is it saying, look, you had JOLTS job openings that came in a little bit weaker, right? That turned red for us. Let's understand the Edgefinder's systematic thinking here. GDP growth came in lighter than expected. Retail sales were a little bit of a miss. Manufacturing was strong, right? We got that as a new data point. Services, actually, this is not updated. This needs to be fixed. This is actually red because services came in lighter than expected. I'm going to type a message to my team right now on that before I forget. Giles, Frank. Services PMI data has not updated. Okay. Yeah, that should be red. We do have bugs sometimes. This is a system built by a couple guys in a dream. So please understand the Edgefinder is constantly being worked on, maintained to work. So this actually is missing data from yesterday. So that is something we will have sorted out if you're an Edgefinder user. Happens periodically. Sometimes data systems break and we constantly monitor it. So there you go. We'll have that fixed, but that should be another red one. So what the point is here, guys, is that some of our economic heat map is starting to go red, and that going red concept may be part of the reason why now the Edgefinder is saying, actually, now you're starting to get some confirmation on gold. Now, that does not mean when you get an Edgefinder reading of a bullish, right, reading on gold, it does not mean, oh, we go buy right now. No, this just means that conditions, the weather, if you will, is favorable for sailing according to the Edgefinder's way of thinking, right? So if you get a pullback in gold, For me, I like that setup a lot. So now what this is telling me, my system is giving me the check mark, at least for now. I'd have to check it at the time of taking the trade. But as long as the Edgefinder continues to look bullish and we pull back into this region, that's probably a trade for me on gold. Does that make sense? Hopefully that makes sense. Is the A1 trading indicator free? Nope, there's not free. There's several salaries behind this thing that get paid. The tool is not free. And, you know, at the end of the day, there's a lot of cost to building and maintaining a software like this. Just like, you know, most businesses, right? It is not free. But if you're interested in getting access to the Edgefinder, it is currently significantly discounted. I'll drop a link here in the chat to where you can get some information about the Edgefinder. So here is the information on the Edgefinder if you're interested in that. a1trading.com/Edgefinder. Or also, if you'd like to speak to a support team member about getting access to the Edgefinder, there you go. Didn't mean the Edgefinder meant the technical indicator. Oh, no, this is also not free. Look, when it comes to free stuff that we offer, we have a ton of free stuff. For example, if you want some of the free stuff on our website, head over to a1trading.com, check out our courses. All of this is free. We have some special sign-up perks available for people who are looking for better brokers or prop firms. I say this all the time, and it's such an important point that I hope everybody takes seriously for a second. Your choice of which broker and which prop firm you use is a part of your trading journey. If you choose a broker and you just say, oh yeah, that looks good, and just sign up, you missed an opportunity. Many times, influencers like myself or other trading content creators, they have special sign-up perks available. It is literally free game. They have welcome bonuses, deposit bonuses. What brokers do, I do this every day, like it's part of my job. I negotiate with brokers to get people the best possible opportunities so that they sign up through my link. That's me being straight up. If you go to Best Brokers and select your country, we have negotiated great sign-up perks for everybody where you are. So like if you're in the UK or in the US, head over to a1trading.com/brokers. What you'll see is there's special sign-up offers on our website that we've got set up. So if you're ever thinking about switching brokers, my point to you, whether it's with us or someone else, shop around. You can always get some really great sign-up perks with most prop firms and brokers if you do a little searching. We've done the searching and put it all on our website. Head over to a1trading.com/brokers. And again, you can see our findings and special signups and stuff like that. So yeah, if you're gonna trade, do it smart. Sign up with a brokerage that is going to give you some sort of special perk, discounts, free stock shares. Don't just throw your money into a brokerage without taking advantage of an offer. Because most brokers, what they do is when they want to, the advertising that we do for brokerages, right? We have options. We can choose between which brokers we want to work with. And the ones that offer us like really good perks for subscribers, typically we keep them on because they do a lot better. Like people get a lot more out of signing up with a certain brokerage. If they get perks, they're more likely. You see what I'm saying? That's what I'm trying to show you here. Look, I am on the business side of the trading industry heavy. I'll never pretend that I'm not, right? We have a software business. We partner with brokerages. You're looking at the establishment. I'm part of the system. But I'm telling you transparently how this all works. When you sign up for a brokerage, do not just walk into a random brokerage that you heard about and sign up. If you've done that, okay, you're not the only one. But at least consider in the future, if you're going to make a brokerage switch, make sure you shop around and get something special with your sign up. Most of them offer it. We have scouted out several of those deals and put them on our website, a1trading.com/brokers. Main goal, what Nick wants for you, Adam, is to be an independent trader, if I understand Nick's point correctly. Yeah, I mean, if our content here helps you, it makes our day. It's awesome to hear that. I got the Edgefinder yesterday and it's awesome. Thanks, A1 Trading Team. Bossy, that is cool. That is cool. Glad you're enjoying it. And as always, if you're an Edgefinder user, click this button sometime and leave us some feedback. We greatly value existing users, what you have to say about the tool, because that is what has driven us to continuously add new features. Like, for example, I don't know if you guys knew this or not, but like our new like European economic heat map or UK economic heat map or US economic heat map, these were requested features by customers and we brought them to life because people kept asking, hey, do we have like some sort of, how can I see all of it in one spot? Well, that's where this idea came from. Is so we really greatly appreciate the feedback that people share with us. Silver was on this list. It's no longer there. That's the only thing about this gold bullish reading that I want to caution on is a +5 is almost like a soft bullish reading. If you get up into like a 6, a 7, and an 8, you have a little bit more room to knock a point off or something and still be in the bullish territory. For those of you who don't know how this system calculates score, it's looking at all this economic data, technical and sentiment data that's automatically being pulled in. And then if it gets a 5 or greater confluence score, that's what we call that, the confluence score, looking at all these different metrics, then it gets a bullish reading. If it gets a -5 or lower, it gets a bearish reading. If it gets a more extreme reading to the downside or to the upside, it gets a very bullish or very bearish reading. So I typically love, if I see something that's very bearish or very bullish, it means we have just a very high conviction, a lot of things pointing bullish or pointing bearish. So I don't have anything on the very bullish, but I have several things, actually all yen pairs getting very bearish readings. I find that to be really interesting, and that has been an exceptional call. Anybody who's trading the yen crosses, if you're an Edgefinder user, I traded them a little bit. I'm jealous of how well they followed through because I took profits on my pound yen short. Obviously a little bit too soon, but I'm still going to be looking for opportunities to short rallies on these yen pairs. They're moving with incredible momentum to the downside. And that actually makes me a little bit nervous about risk sentiment in markets. You know, if the Bank of Japan is going to be hiking rates, what we saw back in August of last year was a serious market sell-off off of the Bank of Japan's carry trade stuff that went on. Here's that August 5th sell-off capitulation day. This all kind of occurred around when the Bank of Japan was talking about hiking rates last time. So I am a little cautionary on markets as a whole right now. Also, guys, we've got our next segment here starting in just a second. We're going to be doing Technical Thursdays with Miko and Marco. We do this every single week to take a look at a collection of charts. We're going to go rapid fire here, so get ready, buckle up. We'll be taking a look at several charts. I've been talking about the Edgefinder a lot. It is also currently on sale. Make sure you don't miss that. We're currently doing 35% off during this live stream. For those interested in picking up a copy, head over to a1trading.com and chat with us in the bottom right hand of your screen, or we'll drop a link here in the chat right now. Should be also in the description. You can speak directly to a member of our support team using this link. So send us a direct message and you'll be connected to either Emily, Drew, or Hallie on our support team who can give you more information about the Edgefinder. They can do payment installments if that's easier for you, but don't miss the sale. The price is super discounted right now for a very limited time. And again, don't miss it. Okay, real quick, we will be right back after this break with Miko and Marco for Technical Thursdays. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. Okay, we're back with the gang is all here. We got Miko, Marco. How's it going, guys? Welcome back.
Hello. What's up?
So for everybody in the audience, us three, this trio has been going strong for, I don't know, we've probably been doing this for like a year now. We do it every week. We pull up a bunch of charts, we rapid fire, share our updates, share our thoughts, and excited to jump right into it with you guys. Maybe we can start with the dollar index. And also, actually, I want to before we jump into this. So we just started a new segment that's kind of fun, Miko, Marco, and I'm gonna challenge you guys with this. We have a new segment that we are calling the chart of the day, where we basically go through a chart, we clip it, and we put it into all of our different socials and stuff like that. So the behind the scenes guys take care of that. They put it up. So instead of just starting with a dollar, actually, let me back up and just say, give me your chart of the day. Like, what is the one chart, whether it's something that you have a trade on or that you're looking to trade, or that is a possible setup for you in the next few days? Maybe we can go, Marco, you first. What's your chart of the day?
Yeah, so for me, it's gonna be the pound and the US dollar.
Okay.
So before this price action, I was actually in a buy setup after this trend up and a flag formation, but I never got the higher low to reduce risk. I do something similar to you, so I never got like a pullback and then a break of the high. And unfortunately, it came all the way back down, took me out for a loss. So that was a bit problematic, but now I have flipped. I've seen a lot of selling pressure. An hour ago, we had the interest rate decision, and I really like this bearish momentum on the 1 hour chart. I'm definitely looking for some entry setups. Like there was just one pullback candle here. It was very small. So I'm going to be looking to get in like a flag formation similar to this one, or just a retest of this level of the low, let's say something like this. And yeah, I really like this chart. In terms of the interest rate decision, well, looks like it was exactly as forecasted, and there wasn't much movement, but I like that we are overall confirming this bearish momentum. So yeah, pound US dollar today is gonna be very interesting.
Love that. So looking for continuation to the downside on the pound and dollar. I'll add one thing on the fundamental side that I thought was interesting about the Bank of England's report. So yes, they cut rates as expected, but there was one, and this is just to show you how very sensitive the market is to fundamentals. Is you had all 9 committee members vote that they think a cut is appropriate. And the expectation was for 8 of them to think was a cut was appropriate and 1 to say hold is appropriate. That's how specific. That's how the market is just wired to look at this stuff so specifically. Is the committee members, who of course have a big role to play in what the Bank of England does next with their interest rates. All 9 of them voted that a cut is now appropriate. We call that a very dovish rate cut. So they cut the rates as expected, but it was done so very dovishly because now they're basically all thinking, hey, a rate cut is appropriate. So yeah, I love that chart. Pound pairs are moving right now. Miko, chart of the day. Is it anything pound related or something else?
Actually, something else.
Okay.
Excuse me. Silver looks really good. We've seen a lot of upside for gold recently, and it looks like silver is starting to pick up the pace a little bit. So I'm looking for buy opportunities on this one. And what does take my interest is a retest of this high, a little bit more intraday, but I do like the setup here around 31.6. If we could see a reaction there, I will be looking to see if we can at least trade it back to the high. But why I do like silver is that the longer term move looks pretty likely. We're still seeing higher highs and higher lows on the daily chart, and we're just about taking up the highs here on the left, which is a positive sign because it means that there's a less likely chance that we do have a big sell to the downside. So yeah, I'm very bullish on silver. Keeping an eye on the retest of that zone, not too far away. So yeah, silver is definitely the one market I'm looking at the most.
I like it. I was actually looking at silver myself yesterday too. Technicals look great in my opinion. You're starting to see some momentum build for this metal. And just a fun side note fact, I watch a lot of like metal stacker YouTube content just for fun. It's like people who buy physical gold, silver, and they just stow it away and they give it to their grandkids kind of thing. It's really you would think it's mostly wholesome, but it's also a lot of people who are like preppers for the end of the world kind of stuff. But what I actually found really interesting is there's some interesting stuff happening with the whole Canadian tariff stuff. A lot of silver in the US that's bought, a very popular mintage is the Canadian mint, which produces the Canadian maple leaf, which is a really kind of iconic coin. Well, tariffs, if they go into play, will also increase the cost of buying that silver because remember, imports into the US, if they go up by 25%, the cost of that silver mint could substantially go up as well. So tariffs are playing a role here in the metals move up in multiple ways, not only from the physical transaction of tariff costs, but also just the uncertainty that goes with them. The market is on edge about this, and while indices can't seem to find a direction, gold and silver are loving this uncertainty that we are sitting in. And I don't think anybody would disagree, whether you dislike what's going on with administrations around the world. We're sitting at a very uncertain time. Things might be better in a year, things might be worse in a year. And I think markets are telling you they see that in the metals. They're trending very strongly to the upside right now. Speaking of metals, I also want to ask you, Miko, while we were just talking about silver, what are your thoughts on gold? Is this a market that you're also watching or not at all?
I am watching gold as well. I prefer silver because silver's not yet at major highs, whereas gold's taking up highs.
Yep.
So I still see value for silver to keep going. Of course, I do expect gold to keep going as well. I think we do have that infamous 3K mark just above us there. So that could be maybe where gold is being attracted to. But the way I see gold right now is a bit more intraday plays. If I'm going to be interested in gold, I need a bigger pullback, at least to the high at 27.88, or preferably back to this level, which is where I was looking to buy last week or the week before, but unfortunately just missed it. But the way I see gold right now, there's a lot of momentum in the market, so more kind of intraday pullbacks on the hourly, maybe even lower, looking to kind of keep up with these higher lows. So still very, very bullish on gold. I expect this to continue as long as we maintain those higher highs and higher lows. But the way I see silver is that we still got targets, highs to take out, whereas gold's kind of already done that job. But yeah, I think we'll probably continue to trend as well.
Okay. Yeah, love it. Elephant in the room for the currency world too. Japanese yen. We have some interesting stuff going on. Japanese yen kind of coming out of nowhere with this big old fat, uptrend move here for the yen. Of course, that would equate to down moves in a lot of the currency crosses, as yen is usually, I always get them mixed up. It's the base and the carry currency. I think it's the carry currency, or the carry currency, the second currency in the symbol. That basically meaning that when the yen strengthens, most of these pairs go down. Marco, do you have any yen pairs on your screen right now? Are you watching any? Are you looking at Aussie yen? I know you've traded that one a lot in the past. Any yen crosses for you?
Well, 3 yen crosses for me, it's gonna be EJ, AJ, and NJ. To be honest, most of them look to be building momentum right now. So in the last couple of days, they have been focusing on like the dollar pairs, for example.
Yeah.
But now the JPY pairs are definitely moving as well. EJ looks the best out of all of them, definitely on my watch list, and it's building some momentum. So I'm looking for sell setups on EJ for sure. It looks to be moving in this sort of a descending channel. But again, it's a type of clean price action that I do like to see if I want to look for setups. It's not messy as it was right here. This gap was pretty problematic that we had, but now it's filled, so I'm not really concerned anymore. And I guess we are following this overall downtrend. And of course, the Bank of Japan also raised rates, which is pretty bullish for the Japanese yen. So yeah, I think it's a very good play, both technically and fundamentally, although I focus on the technicals.
Sure. Yeah, no, I think it's interesting, the movers that are happening right now. A lot of it is around the central bank stuff, right? Japanese yen, this may be a theme for 2025 that I think a lot of people just would not have seen coming, which is you have the Bank of Japan. They just had some really good economic data, and they love that because good economic data tends to make consumers go out and spend money, which is inflationary, right? So the Bank of Japan actually has been struggling with really low inflation, whereas we all talk about like, oh, inflation is a terrible thing, and it's grocery store is slapping me with a fly swatter every time I walk in, kind of thing. Like the Bank of Japan's dealing with the opposite problem. There's too little growth. There's too slow of an economy. So they've actually started to see some good numbers, and that's giving them room to say, oh, we can actually hike rates. So now we have all these other G7 countries saying, let's cut rates, let's cut rates, let's cut rates. And the Bank of Japan, just a beast in the room is like, actually, we got muscle on the growth side. We can actually look to hike rates. And so that makes the Japanese yen possibly a sleeper trade for 2025, in my opinion. I mean, the Japanese yen has gone just nowhere but down for some time. This is very contrarian to the long-term downtrend. But maybe we're starting to see something shape up here for a little bit of yen strength coming back into the picture for the first time in a couple years. Miko, what are the technicals telling you on yen pairs? Are you, I know the last time we've discussed this, you've been pretty consistently bearish on most yen crosses, but holding off on the dollar yen. Do you still feel the same way, or do you think dollar yen has slipped to join the rest of them?
It looks like the way. It looks that way. It looks like dollar yen is slowly making that way. I mean, it's a pretty strong move the past couple of days, and we've seen a lot of momentum. Not yet ready to short it. I'm more focused on the other yen pairs, but it does look like we'll probably see some big moves for yen pairs to the downside, and very bearish on them longer term as well. More so because of where we're situated in the higher time frames. I mean, you made some good points there as well. But this is pound yen, for example, on the monthly chart. Again, not necessarily looking to trade the monthly chart, but I like to know where we're trading, especially when the yen pairs have been trending for so long. It's like, okay, where could they potentially start to stumble? And we're at an area where that could happen, especially for pound yen. Back at this high here, we kind of did something similar over there, and we had a massive drop. I'm not saying that maybe that will happen, but we're an area which we could react. So I think, and a lot of yen pairs in a similar situation as well. So I like what I'm seeing here. Looks like pound yen starting to pick up momentum as well. The next big low I'm looking at is 180. So that's kind of where I'm looking to take pound yen to. And the plan really is kind of find some pullbacks along the way. It's been a little bit choppy. We're trading at support, so it's been difficult to find setups so far. But now that we're breaking through, hopefully something later on can clear up. But yeah, looking for pullbacks and more shorts.
You know, the pound yen started to really waterfall right after I closed my short on it. It's funny how that works. I did have a short position on pound yen, and I had this whole campaign laid out. Basically, I use a little bit of the dollar costing averaging approach when I look at Forex pairs. And so I had this, okay, I'm gonna get short some pound yen here with willingness to add here and willingness to add here. This was a long-term kind of concept. Basically, what we just talked about, how I think Bank of Japan might be the sleeper trade for the year. Well, we dropped, and I closed profits because we're like, oh, hey, we hit support. But this is why markets are hard. It's like the second you think it's gone far, this yen cross, and this is the nature of yen pairs. It could be down towards, 184 by the end of the month. So, that's just the trickiness of it. But yeah, I mean, yen pairs definitely the trouble child of the currency world, because wherever it moves, it's typically moving very, very volatile. But yeah, really interesting just to see where that's going. So we talked a little metals, we talked a little yen, talked not too much about the dollar. Let's just do a quick stop on the dollar. Marco, do you have any dollar crosses that look especially interesting to you that you have not already discussed?
So the best one for me currently is going to be the Aussie and the US dollar on this 1 hour chart. I am in a short trade from this little flag right here. So what I saw is a little bit of momentum exhaustion here on the top, possibly a bit of an overreaction from this gap and from the Trump tariffs, and then a nice, let's say, bearish signature of two big red candles and a nice flat flag. So I got in that one with a sell, currently around break even. In terms of other dollar pairs, well, EU is also producing a bearish momentum, so I do find it interesting, but it's a bit more messy, which is the reason I'm leaving it alone right now. And the pound US dollar again just looks very good for me personally. A lot of bearish signature, and I'm definitely looking for sell setups. So I have Aussie US dollar and the pound US dollar on my watch list, and I think pretty much in February the markets have been moving very nicely. And I do love the volatility. I think we're getting some cleaner price action, overall some more setups. And also a bit of a side note, I see people talking about AI and predicting the impact of the ongoing fundamental events. I did a little bit of research on that topic. So I inputted the last 20 Fed press conferences, the transcripts, into ChatGPT, and told him will give me a bias for every single conference. It was pretty wrong. It was very, very wrong, and it was not a reliable signal. And I also talked to a guy that is running like a prop firm, and he said that AI is still not that advanced that it can like read into macroeconomic events. So what is your opinion on this? Did you look into it?
Yeah, I mean, I look at it quite often because, of course, you know, as us building a tool that is sort of meant to be kind of a pseudo AI tool, it's not large language model, you know, generative AI kind of stuff, but it is meant to be kind of a simplistic checkbox kind of item. The markets get smarter every year. There's more and more money going into it, and people trying to figure out what's going to happen next. What I find kind of when it comes to that stuff is AI will certainly get there, but there's always just innately the future is very hard to predict. And where there is that prediction whatsoever, there is opportunity for people like us who are traders. I mean, if the future was perfectly predictable, none of us would have a job. There's no point in trading because the markets would be so, you know, you would never be able to possibly predict where something's going because everything's already known. Some people actually think that markets are fully efficient, meaning that they think that there is no beating you. If you take a short on gold here, you're a fool. If you buy gold here, you're a fool because what you're saying is you think you know something more than the market, and the market is so smart. I don't personally subscribe to that, but I also don't fully not subscribe to it either. The market is very smart. It's very hard to find great trade setups. And I think that's one of the core reasons why markets are so difficult to actually make money in, that people don't know. And most people think, oh, it's just psychology. That's why I'm not making money. No, it's because the markets are incredibly smart. And for you to beat them, you have to be not only very smart, but also manage risk, manage psychology, all those other things. So it's a good reason for why the market truly is very difficult to make money in. It's not simple as, oh, if I can just stop freaking out, I'll make money. It's not that easy. There's you know, difficulty tiers to the stuff that go deep. But yeah, no, it's a good question. I mean, generative AI is far off from being able to like perfectly predict market trends, just like people, even the smartest brains in the world can't perfectly predict markets. At best, you know, great traders might be able to predict what's going to happen like 55% of the time, rather than, you know, 50. But that's just the less exciting reality of what real profitable trading looks like. It's just slight edge applied over time. You know, so yeah. But we'll the great question. We'll keep going, push on from there because we do have to get through some more sections.
Sure.
Miko, question for you on the indices. I've struggled with this one. They look really choppy, but it looks like it's back towards the highs. Look like indices might be trying to break out. Do you have any thoughts on NASDAQ, S&P, or Dow Jones?
Yeah, price action has been very choppy. I don't like the NAS. Really looks like a consolidation to me. I think generally speaking, if you look at the high time frames, it still very much is a clear trend. So that gives me the clarity I need in terms of direction. So for Dow Jones, S&P, NAS, I'm bullish on all of them. But in terms of finding trading opportunities, which of course is the thing we're all interested about, I'm not really seeing much of them right now. This to me just looks like a range. So if I was looking to trade it, I'd be focusing finding buys at the low, trying to see if I can take it back to the high, or looking for breakouts, which probably would be the better trade because at that point momentum's back and we can look for some pullbacks. US 30 is looking pretty bullish as well. Looks like we're trying to take up the highs. This one again has been quite choppy in this area. But what would be nice again is if we were to see more momentum in price has a bit of a pullback. We can look to trade those opportunities. If we do keep bouncing at the high, things do get a bit awkward there as well. And S&P haven't really been a big fan of either as well. So I'm bullish overall, but we did form a lower high here, which makes things a little bit awkward as we do approach that area where we could form another lower high and could come back down again as well. So in terms of buying, I think around this area makes the most sense, around 59.20. So I still think higher prices are likely, but in terms of actually placing some trades, not really in healthy areas right now.
Yeah, I kind of agree. Especially your Dow Jones chart looks great. It's very close to that all-time high, and we've talked about this many times on the channel. But a lot of times when something is hitting all-time highs, it's actually a really strong signal of potential continuation, right? If you think about it, if it's going to go to all-time highs, it's got to hit an all-time high first, right? It's
Hmm.
gonna keep going. It's got to break to new heights and then consolidate and then continue, kind of thing. Um, I mean, I think the Dow looks great. As long as we can break above this area, that would probably be a trade setup for me, looking for the pullback if we can get it. But I'm also just being slow to act on the indices because, of course, we've just got so much uncertainty with the whole tariff stuff and trade stuff. I'd like to see a little bit more of a clear breakout one way or the other before we move on.
Mhm.
So next question, or same question to Marco. What do you
Mhm.
think about the indices?
Well, they're a bit boring right now. So if we go to the S&P, I mean, we're definitely recovering, but we're kind of flat in this general area. So of course, I have this high in my mind. The tariffs were a big issue where the uncertainty definitely created this flat price action overall. So I would need to see a large breakout. I'm still very bullish. I think the tariffs story was just a little bit of a bump in the road. I think overall we're super, super bullish. And as long as these lows get respected, I think we are well on track to keep trending up. So yeah, very bullish on pretty much all of the indices. If I had to pick the one that looks the best, it would probably be, well, I always love the S&P 500. And I do love this one leg of momentum. Again, big leg, a bit of a bump, speed bump, and then of course I think we will continue up. But to be sure, I would need like one daily candle to have a strong break to the upside. So that is my general story. And what do you think about the saddest story of them all, which is probably going to be Bitcoin and Ethereum? So Ethereum is kind of in the dumps, and Bitcoin is, well, it also kind of hovering in this range.
Yeah, Bitcoin and Ethereum. I mean, Ethereum especially, man. The Ethereum has
Yeah,
been
it's rough.
a
It's rough.
heartbreaker, I'm sure, for a lot of people.
Yeah.
Because I mean, you've got big. It was down at one point the other day. I think it was a 20%. Yeah, it's 25% drop on
Yeah.
the day. I mean, that is an incredible one-day move. I mean, I guess it's not out of the question for cryptocurrency, and I, painstakingly, I wish I hadn't said it. I might have jinxed it, but like the week before, I was just pointing out that you have to expect those kinds of moves. Like a 15% drop in one day is not only possible, but likely. It's just part of the way those things operate. With high gains comes those massive drops, and if you're leveraged on those things, man, those are like liquidation events for a lot of people. It's like, oh, if you're
Mhm.
leveraged on Ethereum, leveraged on Bitcoin, you can get wiped out on days like that. So that's why, Bitcoin. And you got to think like that's not even a real. If we take a look at Bitcoin, I mean, this is a 16% drop from peak to trough, which is not even really a big drop for Bitcoin compared to what it can do. I mean, even in this consolidation that us three, I mean, we talked about this. That's how I know we've been doing this for at least a year together, is because we walked through this whole period together every week, just saying, hey, this thing is just not going anywhere. And at one point that was a 33% drop, but then you also have, like, obviously the true bear market environments, like 77% for the Bitcoin chart here during that same period. The
Mhm.
stock market was down 25 and like 38% for the Nasdaq. So you can see Bitcoin with added reward comes that much greater risk, and it can totally be liquidation events if you get bigger sell-offs for people who are leveraged. So just be careful of that stuff. But yeah, I mean, it's just been range bound. Same thing with the indices. I mean, we talk about this all the time. Just some very high correlation between the two.
Yeah,
Nasdaq,
following the Nasdaq. Yeah.
yeah, as Miko just pointed out, Nasdaq's price action just looks choppy. Kind of the same camp for me with Bitcoin. Pretty much the same analysis that Miko did, which is we're choppy, but I remain overall bullish. I still like Bitcoin to the upside, but I just think we've been pretty right on our theory about Bitcoin as a trio here, which is like you almost only want to be trading it when it's moving, like when it's actually breaking through highs. That's when you want to be looking at it. That's when you want to be trading it. If you're investing, you probably want to wait until it is crashing. But if you're trading it, you probably want to be more on the when it's actually making momentum moves. So yeah, we'll have to keep watching it. But
Oh, sorry, did you re-enter your long, or did
no,
you
I ended up
interrogate it?
I ended up trailing out of my Bitcoin trade when it sold off. It's
Uh-huh. Uh-huh.
about back where my stop loss was, but I'm still just going to wait on this one. Uh, I'd like to see something like this. Again, same analysis as NASDAQ, either a break and retest here or a pullback into consolidation, in which case I'd probably still try a long, as long as it's at the bottom of this range. So that's kind of where I sit with Bitcoin, but we'll have to see where that goes. Uh, I think that's everything we usually cover, guys. I appreciate you coming on here, and before I kick you guys out, let me just make sure everybody who's watching, Miko and Marco both have YouTube channels where they share free value to the trading community. Obviously, they come on to our show weekly, but if you want more from both of them, they both have great content and share some really good stuff. Make sure to go subscribe to Miko and Marco on their own YouTube channels. They have been linked in the chat right now. You can also just search them up if it's easier for you. It's Miko Audu, that's AODU, and Marco's Trading Journey on YouTube. Make sure to go find them and subscribe. Guys, thank you very much for coming on.
Thank you. See you next week.
All right, see you. Okay, guys, the show continues. We got our next trading host coming on to the show. You guys know him and love him. Forex James taking over the show. We talked yesterday a little about dollar cost averaging, and very curious to hear what he has to say with some of the stuff going on. Real quick plug before I leave. If you guys are not in our Telegram channel, I mentioned this while we were discussing with Miko and Marco. We started a new series. Yesterday, actually, Forex James got featured in this series. Yesterday, we did a clip where James and I were talking about dollar cost averaging. We started a new series. It's called the Chart of the Day series. There's going to be bonus content being shared in our Telegram channel. Don't miss those extra clips dropped right here. If you're not in our Telegram channel, it is free to join. We actually just dropped our free course in there. There's so much value in our Telegram channel. Do not miss the chance. It's free and in the chat right now. Okay, quick break. And then up next, we got Forex James taking over. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey guys, how is everyone doing? Hope you're all good. Heading into the end of the week now. Got one more day to survive with US news tomorrow, NFP, unemployment. It's all going to be fun. Now, I'm going to embarrass myself a little bit here because honestly, man, I woke up this morning. Well, actually, I got to the charts this morning, and it was one of those moments where I didn't know if I should laugh, cry, throw the monitor at the wall. Didn't have a clue. So I've been showing you guys this pound dollar position that I took. I reduced the stop by 50% ahead of FOMC that we had, and this trade looked fine. You know, the market's opened, gap down. I was like, yes, this trade's sweet. It's all good to go. Today, wicked out by, actually, let's just see how much this was. This was 11 pips, which, you know, to some of you might sound like a lot, but for a swing trade, it's not. So that was really frustrating. And look at where price is now. One of those trades that just didn't work out, barely. Now, that would have been fine, but it also happened on euro dollar. Exactly the same thing. Stopped out. To be fair, maybe I should have had a bit of a wider stop, but you know, hindsight's great. Stopped out literally on the pip on this one, and then came back down to entry. So I'm not a happy guy today. So that's good. Yeah, great way to end the week. But there you go. Yeah, I don't know what's been going on with those comments. I was sat in the back waiting to come on stream, and I was like, oh my god. If you're sat on a Thursday morning or afternoon and you've got nothing else to do, then talk rubbish in a live stream chat. You've got some sort your life out, really. How's everyone doing? Good, sweet. Okay, so update on my position. So I'm still in these euro-dollar shorts. I think I showed these yesterday or the day before. They were roughly in around here, so pretty much in complete drawdown yesterday. Luckily, US dollar strength came through this morning, so currently sat in a very small amount of profit. I'm looking to hold these down to around 1.01. Oh, sorry, 1.1. So we'll see, but it's dollar cost averaging, so it could go either way. If we get negative news tomorrow from an NFP and unemployment, then I'll likely just cut the position and look to add in at a higher price. But yeah, we'll see. Looking to get into gold actually as well. I might execute this on stream. It depends how the market moves. I'm on the 30-minute chart, so if we can get a 30-minute bullish candle close, maybe I'll look to take it. So we had gold actually pop up on the Edgefinder with a reading of +5, giving us a bullish signal. So it would be quite nice to get into gold and join this bullish run that I've missed for this whole period. So that would be good. But again, we'll see. I don't want to be the guy trying to buy the very top. But is this the top of gold? I don't think so, because yes, we've had an aggressive run to the upside, and yes, I think we are due some sort of pullback. Whether it's going to be a big one, a small one, I don't know. But the reason that gold's still moving to the upside is still in play. So buying it to me seems like a very sensible idea. I've actually placed a long position on silver. I heard Nick talking about silver. So I'm looking, this is a position trade. So this isn't something that I'm doing, I'm going to be closing anytime soon. But I'm looking for around $38 on silver. So it's a pretty small position size. So I'm looking really actually to get some sort of pullback on the weekly time frame or the daily time frame, so I can add in and sort of build a bit of a bigger position here. Dollar Swiss also showed this one. So this again is a position trade that I'm looking to hold for the next maybe year, maybe 2 years. I don't know. We'll have to see again how the economics develop. And Swiss yen, I'm now looking to get into Swiss yen. I've been speaking about this one too. So leading on from again what Nick was saying just before I came on about the yen, it seems like they're on a path to normalization. Seems like there's quite a lot of optimism at the moment around the yen. So if we look at the index, it's looking pretty convincing actually. We could be, well, the way I view it, we've got two situations here. Either this is going to just be a lower high and we've seen the yen benefit from dollar weakness, temporary dollar weakness, and then we could come back down, get an intervention, and then maybe we start heading to the upside. Or the other option is we come back to this previous high, we break out and start crawling back up and giving the yen bulls some hope. So we'll see how that develops. Again, I'm looking to get in pretty small on Swiss yen. I just think it's a little bit, it's not where I want it to be to get into the first position. I would really like to see just some sort of bullish movements, very small, just something. But obviously every little thing helps in trading, so we'll see how that goes. But yeah, mainly just watching these euro-dollar shorts at the moment, monitoring them and looking to maybe scale in if I see an opportunity. And again, looking to get into gold if I can see. Yeah, I've got 10 minutes actually until this candle closes, so it'd be quite nice to get into a gold long potentially and see how that goes. Sean, good to see you here. Lee. Sorry, guys, I haven't checked the chat. I've just been yapping away. I'm on for an hour, so hopefully you don't mind seeing me here for a little while. Bank of England cutting rates cheered me up. You know what, Lee? It would have cheered me up if my trade wasn't stopped out in the manner it was. Oops. I mean, anyone that's been watching my segments regularly knows that I've been a pretty big bearish guy on the pound. But unfortunately, I've actually not made any money on it, so that's great. Luckily, I'm not too salty because I made pretty good money on the euro-dollar shorts I've been calling, but it would have been amazing to catch the pound as well. Yeah, I don't know where all these guys have come from. It's strange. I just don't see the point. Anyway, Kiwi futures. I don't trade futures, but yeah, we can have a look at the Kiwi in a second. Yeah, Chandler's doing a good job cleaning up the trash. Tom, good to see you. Raymond, I am shorting Australian dollar yen. Could you have a look and tell me for how far it could go down? Oh, that's always the golden question, isn't it? How far could the market go? Now it depends. Oh, that would have been good to get that. It depends really, because I think in the long term, there's a lot of potential actually for yen long. So it depends how long you're willing to hold it or how long you're willing to really get in, get out, and do what you need to do. So I'm not going to look at the economics for a take profit, because if I was, let's say, for example, I shorted here, or I shorted here, actually, let's say, I'm not going to close out here just because we're coming into a support. I'm going to close out when the data tells me. So if the Bank of Japan starts holding rates, or if Australian dollar starts doing better and for some reason they start hiking rates, whatever it may be, that will then be the signal to close, not necessarily technical levels. So it's hard to really say, because obviously we'd have to be in the moment to really have a solid idea. But again, just based on technicals, I think potentially these levels wouldn't be outrageous to say. Again, if we are looking for some long-term yen strength and the Australian dollar is not doing great, I think, yeah, possibly down to 88 would be first take profit I'd be eyeing up at the moment. Yes, I'm going to get to Kiwi futures. Give me a second. My trading style is, I don't really have just one. I've got a few ways to trade. I'll trade anything I see that's fit trading, and whatever strategy it requires to get in, I will do. So for example, I'm long-term bullish on dollar Swiss, long-term bullish on silver. So I've taken position trades just so I can ride them and not worry about them too much. Whereas euro dollar is a little bit different, because it's quite volatile at the moment with Trump tariffs, and is he going to put tariffs on Europe? Is he not? How's NFP going to come? I don't want to position trade, so I'm happy to just DCA this. So I've added in as it goes up, because my fundamental bias is bearish. And then if it comes up again, I can short again, looking to take profits down at 1.1. So that's kind of it, really. I do swing trading as well, but I haven't placed a swing trading in quite a while. So you want to talk about the Kiwi. Let's have a look at the Kiwi. Which charts am I not using? We'll get rid of the yen for now. So Kiwi. Actually, I need to have a look. I've not looked into what's going on with New Zealand for a while. Let me just do a double check on the economics. What have we got? So we've got New Zealand dollar remains vulnerable New Zealand dollar remains vulnerable to external risks, particularly China's economic slowdown and global interest rate trends. Oh, actually, let me put it on screen. Sorry, I didn't realize you couldn't see that. Bank of New Zealand, cautious stance on rate cuts provides some support compared to currencies with more aggressive cutting cycles. Yeah, it seems more bearish, but nothing overwhelming at the moment. So let's have a look at the Edgefinder and see if we've got anything there. New Zealand yen is all I can really see. We've also got New Zealand CAD, but again, with the tariffs on Canada, I'm not too interested. I'd need to really wait and see what happens there to start trading the Canadian dollar again. So in the short term, it wouldn't be a surprise if we maybe stay within this range for a while. I mean, this is a pretty strong level of support. We are seeing a little bit of a bullish momentum, nothing too crazy. So in this situation, I'd either be looking for a complete break, and that would be a signal to continue selling, or I would be expecting some sort of continuation and maybe a correction to the upside. Obviously, it can go up or down, so definitely nothing spectacular in that analysis, but unfortunately, that's all I've really got for you at the moment, because like I said, it's not something I trade very often or look into at the moment. Silver longs, yes, I'm in favor of silver longs. I think gold, silver, and even aluminium all have, copper as well, all have a pretty good potential to continue to the upside. Silver, however, the technicals I'm not too interested in, so I am basically just clicking buy. In terms of, actually, let's have a look at short term. Let's see if we can find anything. Yeah, okay. So if I was looking to take a short-term trade on silver, I would want to really see very simple break, retest, continuation. There's nothing else there. So you can see the immediate trend is to the upside. There's nothing really standing in the way of price if it breaks this level, other than a minor level of resistance here. and then it's pretty much clear to run all the way up to $34. But yeah, I think we're pretty certain really that silver is undervalued in the long term and on the grand scheme of things. So yeah, buying it makes sense. I agree. Keep it classy. We're all adults. We're all trying to make money. We're all professionals. James, just curious, do you use the same strategy when you trade different pairs? What, DCA? No. The reason I DCA on euro dollar specifically, let me show you. I was explaining this the other day, but I can't remember where it was. So if we go onto the weekly time frame and zoom out, this trend, in my view, is overall to the downside. The US economy is very strong, especially if you compare it to Europe. It's a lot more robust. I mean, especially at the moment. So it's one of those things of, yes, I'm happy to short Eurodollar at the moment, specifically because of the macros, but I also am quite happy to short because I'm generally in favor of the US dollar over the euro, regardless of what's currently happening in those economies, if that makes sense. And G10 currencies generally act like an elastic band. I was actually talking about this with Nick yesterday on stream. But if you look at the behavior of G10 currency pairs, they might have rallies. Sure, I'm not saying they don't have rallies. They might be huge rallies, but because they are such solid economies and they're so big, we generally see a reversion back. Now, again, this is where risk management comes in. So I'm not saying you sell everything, buy everything just because it's overbought, oversold, but generally it's the type of behavior we can see. Whereas if we looked at the S&P or gold, silver, something that isn't a major or even a currency pair, generally we won't see the same behavior because, look at gold. It can just run and run and run and run. So yeah, that's a very brief explanation as to my thought process there. Dollar CAD. Let's have a look. I'm not sure if dollar CAD is still on the Edgefinder. Actually, I know it was a bullish read-in for a short period of time. I'm not sure if it still is. No, it seems to have disappeared, which is good, actually, because I'm not really in favor of the US dollar Canadian at the moment. So the issue I've got is I don't know what's going on with oil, and I don't know what's going on with the tariffs, because the tariffs have been postponed for, is it 30 days? I think they've been put on pause. I'm fairly sure that is the situation at the moment. So that gives me a big question mark with, what is going on with oil, because is OPEC going to lower prices? I don't think they will, but that's still a question mark for me. Trump's drill baby drill, when is that going to happen? Is it going to happen? US tariffs on Canada, what's the situation there? So I just don't have enough really to build a trade or be comfortable going in for a trade. Then we've got the price action, which, yes, we've seen a very brief breakout due to the tariffs and then a break back down due to tariffs. So, yeah, it's just too much I'm just not sure about in this market. So I know that probably isn't the answer you wanted, but it's the truth. I'm not going to try and tell you what I see if it's not true. So, yeah, the market literally has been stuck. Actually, how much is this? This is a 1% range, or a sort of 165 pip range, which again might sound a lot to some people, but if you're a swing trader, it's nothing really. So yeah, there's nothing to do at the moment. Thoughts on DAX? I am not sure about DAX because I don't think so. The situation in Europe isn't attractive to investors. In fact, Sean, who's in the chat, I was talking to Sean this morning. He's in my Discord. Me, him, and my trader had a great conversation about this and about Europe and things. But Europe just isn't attractive to investors at the moment. We've got, the high taxes, even just the general European economy just isn't great. But what we do have is obviously the ECB cutting rates, which generally is good for the stock market. So I am willing to follow the overall uptrend, but not much. It's not something I would, for example, buy here with a stop loss here and hold it, because I'm just not really a fan of the DAX, but I think it does have upside, generally speaking. But yeah, it's just due to Europe. It's not something I'm happy with. Sorry, guys, I'm just catching up on the chat. James, out of curiosity, could you show inflation data for the UK in the Edgefinder? Yeah, of course. Keep seeing these guys' comments, and then they get removed like half a second after. Very weird. Yeah, UK inflation. So there you go, Lee. Bashi, hello. Oh, sorry. Did you want EuroCAD, not $CAD? My bad. Oh, no. Oh, either way, you know what I was talking about. You spoke positively about many metals aside from platinum. There's no reason I don't talk about platinum. It's not something I really trade. I don't look into it. I don't know anything about platinum, really. Actually, I wonder, do we have any... actually, I do have some research on platinum, but it's not because I trade it. It's just to give information to people. By the way, this is 100% free. If you go onto the Elite Traders website, you can just click on global research and you can find the most recent article. And yeah, I put this out every Sunday for people. Again, it's 100% free, so feel free to go and check it out. But yeah, overall, what is going on with platinum? Medium term, if it begins cutting rates, platinum could rally. Hydrogen economy growth, green energy policies could provide new structural demand. It sounds bullish. Yeah, I would be more looking to go long, I think, on platinum, along with copper, aluminium, silver, and gold. But again, because it's not something I trade or know much about, I'm not willing to do that. But yeah, the overall direction, I would say, is pretty similar. Yeah, Chandler is on fire today. I think Nick owes him a pay rise, or at least a beer. Petrol Amachno is putting masterclass on moderation today. Abderrahim, I'm sorry for butchering your name. It's good to see you. Yeah, no, it's good. It's one of those things. So yeah, obviously it's free, but obviously, you know, I break it down in things with members. But I think there's a lot of things that are gate kept and behind paywalls at the moment in the trading space, which I understand. I'm not saying it's a bad thing, but I think if you can, you know, if there's things you can do for free that aren't going to be detrimental to your business, I think it's not a bad idea. And in this case, putting out some free research isn't any skin off my back. Pound Australian, confirm sells. You're putting a bias in my head. I'm not sure if I like the bias yet. So wait, what is it? Pound Australian. Where is it? Sorry, guys, for keep hearing my phone going off. I just realized I didn't put it on mute. My bad. So yeah, I think generally speaking, Pound Australian is bearish. I mean, the Australian dollar is not really anything too strong at the moment. I'm not impressed by its performance, but if you compare it to the situation the UK is in, or the pound, yeah, I would more favor towards Australian dollar. So yeah, shorts, I would suggest makes sense, or say makes sense. In terms of an entry, let's see, I would expect a pullback actually at some point here. Where to exactly, I'm not sure, but I would say really in between the sort of the resistance here. So anywhere sort of in this level, stop loss above, maybe even at these previous highs. And then we could put take profit down at the low. This gives you a nice 1 to 2 or even 1 to 2.5. Take profit down there. So I'd say this maybe isn't the worst idea. But again, you are still trading two weak currencies against each other, which isn't my favorite thing to do. Thoughts on gold? Actually, let's take a look at gold. I'm still looking for that entry. Still coming to the downside, so no entry yet. So to answer your question regarding gold, I am still bullish. We've got the Edgefinder that's given us a bullish reading on gold. It's given us a oh wow, it's gone up to +7. It was 5. Well, actually, this morning I think it was 1 or 2. Then it went to 5, and now it's 7. So yeah, I am looking to get into gold. Just trying to gauge what a sensible pullback is to enter here, because what I don't want to do, which is what I did last time when I was waiting for a pullback here, is sit on the H4 and the daily time frame waiting for a pullback that isn't going to come. So I think given the strength in gold, I'm quite happy really to sit on the lower time frames, sort of the H1 to H4, and look for a smaller pullback and just try my luck there and see if I can get something to work out. And if not, then sure, I can keep buying dips if they come. So yeah, I'm paying attention, but again, I don't really have a solid entry level at the moment. I feel like US30 is going to fall. Why? What gives you that idea? I'm not saying you're wrong. I'm just curious as to why. This is sad. Again, if anyone watching my segments before, I've been talking about wanting to pull back here. Then we got the market gap, and I wasn't confident enough to pull the trigger. You know, hindsight, 2020 should have done it, but I didn't. So I should just get rid of all of this. Yeah, I think short term, potentially just off natural market dynamics. I mean, we've got pretty strong support here. So overbought RSI. So yeah, it wouldn't surprise me if we do have some sort of pullback. I'm not sure by how much though. My Australian dollar Swiss trade has finally got into profit. Nice one, Lee. It's good to hear. I'm happy for you. I feel like I unleashed it on the signs more often. Yeah. Look to use a return to mean as your pullback. Sure, I'm not sure what you mean by that. NASDAQ could be beautiful long if it retraces to higher time frame POC. What does POC mean? Is that like point of contact? I don't really use all these new cool abbreviations. But yeah, I think we are looking, I don't know, actually. I'm not seeing enough direction on these indices. I mean, the S&P, sure, I mean, it's a big range. You could definitely get something in here, but I don't like to trade things like this. I like to have a very defined, clean move. Either way, it could be up or down, but that way, at least I can get in. I know I'm in the right direction, and I can essentially just leave the trade to run. In markets like this, though, it's not for me. I don't like it. So yeah, I'm kind of sitting neutral until I have any reason to think otherwise. Oh, point of control. Okay, I see. So use Bollinger Bands. Look to use the MA's pullback. Oh, okay, yeah, I see, Sean. Makes sense. POC means point of control. You have the fixed range volume on the left. Okay, yeah, I get it. Makes sense. Swing trade, not position trade. Yeah, again, I mean, this is the H4 chart, so I think the same sort of thing applies. I mean, you could, yeah, you go down to the H1, you could probably catch something on the next pullback. But again, even so, if the higher time frames is just range bound, that's not a good sign for the way I trade. So I'm pretty neutral. If the Edgefinder gave a bearish signal and I'm in one and after news, and that shows neutral. Bozy, it depends. You could do either. If you took the trade just because the Edgefinder said so, then yeah, I mean, you would really want to follow the system. So, you know, if Edgefinder is bullish and you buy, for example, then it changes to neutral, then maybe close it or trail stop losses. And then if it changed to shorts, then look to close it. But again, you'd have to really have defined rules. And it also, I would say, is very dependent on what data point changed. Because, for example, if it was just retail positioning that changed or seasonality that changed, it's not a huge impact on the overall, the market in general, to be honest. Sometimes drawdown feel like a dark cloud. So glad to finally get out of it. Yeah, drawdown can be rough. The worst feeling, though, is when you've got multiple trades open and none of them are correlated, but they're all just in drawdown. That's pretty horrible because you've got nothing to even like have much of a smile about. Pound yen, any entry point? I wish. I'd love to find an entry point, but at the moment there's nothing. So again, very simply, just look for a pullback. We are at the previous low. RSI is oversold. We've pushed down this Bollinger Band quite significantly. So yeah, I'd be happy really to look to short anywhere on this pullback. So if we could get a pullback to these lows, that would be great. If we could even just get a move back to here, fine. But yeah, any type of move back, I'd look to potentially start going short. Always looking at clouds with the Ichimoku. Yeah, fair enough. I didn't see what that one said, but didn't look good by the reaction. Indices are choppy for now, even though I have an open position. Christine, you're saying that like because you have an open position, there should be volume. What's your position size? Did you open 100 trades at 100 lots each or something on the open market? Eurodollar's having a nice little pullback here, which is good because I might be able to get another entry at some point. So yeah, sitting on that one. Gold, yeah, still not giving much, but a pullback's nice because we can always look to get in then. Pound Yen COT report seems bullish. Yeah, well, COT data is good for confirmation, but as far as I'm concerned, COT is like, it's just a lagging indicator. Again, it's good to have an idea, or to back up an idea, but it's not something I would really base a trade around entirely. Just like anything else, it's like I'm not going to take a trade entirely because of retail data or entirely because of inflation or whatever else. Thoughts on Euro Australian swing shorts? I think you're a bit late, to be quite honest. Again, similar to what we just spoke about, I would be looking for some sort of pullback. I don't like the way that this is, though. We're not having much clean moves. This is very, very choppy, very, very difficult, really. It actually reminds me of the oil chart at the moment. So yeah, I think look for a pullback, or I would look for a pullback, take profit down to the lows around here, and then a stop loss wherever you see fit based on where you enter, and then yeah, something along these lines. But again, it's not really something I'd be looking to take. Is it safe to say the dollar's finally bearish? No. I had a question like this actually last night in my Telegram. And what I was saying, the answer I gave to that person was, what we've seen on the dollar has been mainly just volatility, uncertainty, panic. It's not speculative trading. It's not necessarily positions getting put into the dollar because it's viewed as a bearish currency. It's more just people taking money out of the dollar and putting it into other currencies or other assets because they're not sure what's going on regarding the tariffs and Trump. So if you look at the overall data for the dollar, it's definitely not as strong as it was. Retail sales has come down. Services PMI is slightly down. GDP is down. Employment claims went up a little bit. JOLTS not great. But again, when you're looking at currencies and you're looking at economies, it's not just about what you see here. It's also about what you see, for example, on euro. So this is essentially entirely red, giving us a bit more of a bearish thing. So you've always got to look at it relatively. But to answer your question, no, I think what we're seeing at the moment with the dollar is more just noise rather than a structural shift. I'm not saying it can't go down further, by the way. I'm not saying that I am super, super bullish right now. I'm just saying I think the overall bullish idea on the dollar is still relevant. I'm not looking to start selling it just yet. Yeah, Sean, that's true. As Sean said, it's confluence, not the driver. Oil has had a good buy, but the fundamentals, yeah. Again, not really a fan of oil. It's in a position where I would quite like to buy, but again, with Trump, with his drill baby drill and buying Greenland, taking over Canada, drilling more in the US, yeah, it's just, again, it's not something I'm comfortable enough with to put money on the line. We've already covered the NAS. I'll cover it again shortly if we run out of things to go over, but feel free to rewind if you want to. Marcus says, "Am I cooked? I don't know. Are you? What's the situation, Marcus?" If NFP tomorrow is bad, yeah, Marcus, I would agree. I think there's a lot of anticipation. You can see that really in the markets. We're not seeing a huge amount of movement today. So yeah, if NFP comes out bad, unemployment's not good, then yeah, I think we might start seeing a little bit of the dollar optimism cool down. Is Nick coming back today? I don't think so. He might come back in between segments. Let me check. No, he's not. So I'm on now until, actually I've got another sort of 25 minutes roughly, and then you've got Chris Pulver coming on to take over after me. So Nick normally does his segments first, so he'll do his bit, then he'll normally come on with someone else. It might be Ivan, Miko, Marco, someone else, maybe me, and then it'll be the guests that take over after that. That's the normal structure of the streams as far as I understand. How's pound dollar waiting for a pullback short entry? Yeah, I mean, I think it's a pretty sensible move. I'm still bearish on pound dollar, especially after what we heard today. There was actually, let me just double check this information so I don't get it wrong. I can't remember where I saw it either. That's the annoying thing. Either way, I can't find it at the moment. But either way, it sounded pretty hawkish from the statement. So yeah, I'm not really looking to start going long on the pound at this moment. So I think pound dollar short makes sense. Euro dollar short still makes sense. Swiss yen, in fact, yen crosses all make sense. Not sure about euro. I'm not sure about dollar yen. But yeah, I think at the moment we've got pretty clear ideas. It's just the execution of those ideas could be potentially difficult. Emil got banned. Didn't Emil just ask if Nick was coming back, or did he say something else? Must have missed it. Yeah, no problem, Sassy. GJ shorts will be king. Yeah, I think GJ shorts are definitely good. So I think what I'm going to do to structure my trades going forwards is I'm going to focus on Swiss yen position trade. So I'll be looking to trade that one for the next sort of 6 months, year, 2 years. And I can use pound yen as sort of a day trading opportunity, swing trading moves. So I can just sort of short, almost treat it like I am doing euro dollar. And we can see how that goes. But again, you know, it was only a month ago that I was saying I'm not touching the yen for the rest of the year. So I've really changed tune. So I'm going to have to just keep myself in check a little bit. Managed to get GU trade around where you were wicked out. Yeah, good stuff. Well, at least one of us made some money on that one then. Yeah, I don't know what's going on today. I mean, you know, I see people talk rubbish in the chat now and again, but it's never to this point. I don't know what's happened. Oh, right. Okay. Was it a different? Oh, whatever. Anyway, I'm confused. I'm losing track of what's going on in this chat. Okay, hold on. New Zealand dollar Swiss swing short. I'm not sure about New Zealand dollar Swiss. The reason I'm pivoting around the Swiss is because I'm long-term bearish. I'm not really leaning either way on the Swiss at the moment. So let me just pull up something here. I can't show you it, but I can read it off for you. Just give me a second. So if we're looking at the central bank rates, yeah, the Reserve Bank of New Zealand is projected to cut really until around 3%, and then it's going to sort of get held. It might fluctuate between 3.02 to 3.1, 3.06, whereas the Swiss National Bank is cutting from they're currently at 0.5. it's looking like they're going to cut all the way down to 0.02 and potentially go into negative rates. So yeah, I think New Zealand dollar Swiss is not my most favorite idea, to be quite honest with you. You know, it's funny. I keep missing all these messages. I look at something on one monitor, then turn around, and someone else has got banned. Interesting. Very strange. Don't know what's going on here. Need to introduce some sort of MFA to chat. Yeah. Yeah, interesting. Okay. Very strange people on the loose today. Might have been some sort of breakout from an asylum or something. Either way, it is what it is. I've lost my trail of thought now. Let me have a drink. I'll be back in a second. Okay, so let's see what's going on here. Gold, yes, having a nice little move down. So if I'm going to take a gold long, I need to pay attention to what's going on in the dollar, really. So I need to see. Oh, well, maybe now. So if I was going to go long on gold, I'd want to stop loss here. Actually, this is perfect. S3. Look on the H4. That does allow room for some movement. But do I actually want to enter here is the question. I think I kind of do. We'll see. I'm going to see how this 30-minute. I'll see how the 30-minute closes in 5 minutes. And then, yeah, I'll reassess. Yeah, Sean, that's exactly what I'm looking at. If we can see that wick, it would be quite nice. You're Australian, currently shorting. What do you think? Yeah, I think it makes sense. It's not an ideal trade in my view, but I can see why you would want to be short. James, same person making lewd comments, and again, I see. Okay, right. Okay. What happens to the guy with glasses that used to come on with Chris? Do you mean Frank? Yeah, I'm not sure. I've not seen Frank on the streams for a while. I assume he's behind the scenes working on stock box and stuff. Andrea, I can't recommend anything, but yeah, I'm going to wait for gold just to see what happens on the candle close in 4 minutes. It wouldn't surprise me if gold gets to 3,000. I'm seeing a lot of talk about that at the minute, but of course, the more you hear about it, often the worse that actually is. But yeah, I think if I do get into a gold long, I'll look to hold to around 3K if we can. Do you think USD will continue strengthening? I have a feeling NFP will turn out strong. See, I think we will get a strong NFP, but that's more just a feeling. I'm not 100% sure, to be quite honest with you. Actually, I'm not even sure what the projections are for NFP. Let's see, or what the forecasts are. Oh, gold's really moving. So let's have a look tomorrow. So unemployment's expected to stay the same. NFP expected to come down. So yeah, 169K, 256 was previous. So we'll see. I mean, last month's NFP was really hot. So we will see. Unemployment is meant to tick up as well. So if we do see an improvement, so if we see unemployment come, oh, sorry, that's Canadian dollar. I'm looking in the wrong place. So if we see unemployment come down from 4.1 to even 4, would be great. If NFP could come in around 180, that would also be great. And then I think, yeah, I'd be pretty happy about that, but we'll have to see. trade gold on a daily basis, and I don't see buys just yet. I actually want to see gold as low as possible. Yeah, I mean, that's the thing. I'm not too bothered. If I was going to buy gold, it wouldn't be anything crazy in terms of position size, and I'd be looking to buy somewhere here. If it doesn't work out, fine, I'll look to buy it in another level. Not too interested, to be quite honest, in being exactly right on the entry. Obviously, we've got NFP tomorrow as well. So if I did buy today, I would need to factor that into the stop loss size, which I might not actually be able to do. So on second thoughts, might leave this trade alone. What is going on here? It's really hard to read the chart with all of this going on, seeing it flick up and down. Dollar Swiss, yeah. Yeah, I mean, like I said, I'm still bullish dollar Swiss, short term and long term. I'm not convinced dollar strength is fully over yet. I think we still got some steam left. The Swiss, I think, definitely isn't on par with the US dollar in terms of strength. I think long term, it's only going to get worse. So yeah, I think US dollar Swiss longs are fine. I actually wouldn't have minded potentially buying off this level of support. I think that would have been a pretty good entry, actually. So if you can see very simple levels of structure getting respected, if we can see the US dollar at least not falling off a cliff, I think, yeah, I'd be quite happy to continue to look to buy any sort of downturn in dollar Swiss at the moment. Kenny, yes. So I'll be live on my channel. Nick will be live on this channel. So yeah, you'll have plenty of options for NFP. Gold is on a profit-taking dip. Yeah, Leo, I would actually say, yeah, it doesn't surprise me. I mean, this candle is pretty aggressive, actually. Neither have I, Andre. Yeah, this is like one of those. It's the type of chat I would expect on, you know, there's Twitch streams with Aiden Ross and all those types of people. Do instruments generally reverse back to the starting point after news? It depends what news aviation, but I say generally yes. So if we have, so if you look at previous NFP releases, generally we see a correction back to pre-NFP price. Same thing with sort of day-to-day releases we do, but you've also got to be very careful because you need to pair context with that. And also it depends, yeah, again, on what the news is. If you've got some serious news from Trump, you know, if he's applying huge tariffs to Eurozone or to Europe, then no, we're probably not going to see that get corrected anytime soon. So yeah, you just got to be very careful on what you're assuming or what you're looking at for corrections. Yeah, if Trump does get involved in Gaza, I'll look to buy gold as soon as possible, really. But to be honest, I don't think he will. I mean, you know, we should all be aware, but there's been lots of talk by professionals about what would happen if Trump did try to take over Gaza. None of it ends well for anyone. So I just don't see any benefit for him to do that, other than like an ego move to just say he's done it and to plant his name in history. But yeah, I just don't see any real value for the American people and for the American economy or for the rest of the world. It's, yeah, whatever. Does news affect your trade today? I see you have very tight stop loss. I don't have tight stop loss. I actually don't have stop losses. So euro dollar here, there's no stop loss. Got a silver trade here, no stops. US dollar Swiss, no stop. No, stop losses don't affect me. So the way I trade is based on fundamentals. So if the fundamentals change, then yeah, I'll look to pivot my idea. But generally speaking, I'm just looking to get into trends and ride the wave. Miss Frank, have him on sometimes. Yeah. I'm sure Chandler read that. He might pass the message on. Trump can't half the things he boasts about being able to do, just small. Yeah, that's the thing, Lee. I was talking to someone the other day about. Oh no, sorry, I read something the other day. It seems like, is Trump actually wanting tariffs, or is he just saying it and using it as leverage to get what he wants? I mean, Mexico's a good example. Mexico's now working with him. They've done what he wants because of tariffs. We've got Canada that's paused so they can talk. Does he actually want tariffs, or is he just saying it to try and, sort of kick the other country into doing what he wants? We'll see. I would not be surprised if he intervened. They already named Egon has. Yeah, maybe. I mean, it is Trump, so we can't really write anything off, but I think it would be a very stupid move for him to get involved, or to, start mixing things up. How do you manage the no stop loss thing? I just do small position sizes. I can cut positions when I need. I can add in at higher prices. Yeah, it's fine. I've got a pretty strict risk management model to go with it, so it's not a case of I'll just hold on to a sell until I'm liquidated. But yeah, so it's dollar cost averaging. I mean, I'm not going to explain it because we've done it quite a lot on this channel. But essentially, as price rises, if I have a specific macro or fundamental idea, and the overall market trend is also in the same direction, I am quite happy to start selling small correction or small pullbacks to the upside. It's almost like if you're in a downtrend, you put an entry, stop loss, take profit. It's the same idea. I just don't place a stop loss. And I also use smaller positions, which allows me to then get into drawdown and place more positions, bring an average price up, so then I can profit more on the drop. Not looking to short dollar Swiss. I'm actually in a long position on dollar Swiss at the minute. Yeah, it does seem like it, Bashi. Seems like good leverage. Although I would like the tariffs on Europe. I think that would be very beneficial for my positions. Yeah, Lee, that is true. I know he can't just do whatever he wants, because he obviously does need to answer to some people or get things passed, but still his words hold weight. So it's still, even if he says something, there's still potential for reactions there. What's the best place to see unscheduled news events? Google is useless. Well, there isn't really unscheduled news events. You have headline news when someone says something and it's not like a news release. In that case, you could use something called Financial Juice, which is this website here. This is free, but this is a live news flow. So you'll get, for example, if Trump says something, it will pop up here. Or if something happens that isn't on Forex Factory or a news calendar, you'll see it here. So it's a good way to just stay up to date using that. If he pulls tariff on euro, so good for trading perspective. It is indeed. Oil sent lower on news. Trump peace plan for Ukraine is leaked. Interesting. Talks with Putin ceasefire by Easter and an end to Zelensky NATO dream details. Okay, interesting. I'll take a look into that. Identifies Chandler. 80% fundamental, 20% technical. I'm going to be honest, my trading these days is actually it's more like 5% technical. I'll just look for some level where price could maybe start reversing back to or revert back on trend. I'll enter on that one. If that one's wrong, I'll enter on the next one. And that's it. I'm not really doing much more than that these days. I used to be a lot more. I used to be around 20% using fibs and structure and all that sort of stuff. But yeah, not so much anymore. Yeah, best place is Truth Social. I'm not downloading that. Every Trump sneeze, the market catches a cold. Yeah, these are just Trump's markets, aren't they? We're just trying to survive. 99% technical and 99% SL hitter. Fair enough. No, I'm dollar Swiss long at the moment. this is the position you see, first long-term position initiated. So I'm looking to hold this one for quite a while, back up into potentially these highs around here in this area. So anywhere between 1.15 to 1.4 is where I'm looking for a long-term move to go to. When I say long-term, again, it's probably the next 1, 2, 3 years maybe, but we'll have to see. Could happen much quicker depending on events. I remember Trading Nick saying gold is bullish on Edgefinder, aged really well now. Yeah, don't tell anyone, but I follow him on Truth just to keep an eye on the son of a camel is spouting. Yeah, fair enough. I might remind you, Forex James, not much in the way of technicals. I'm just clicking buy. Yeah, that is basically it. Yeah, just click buy or sell. Eventually, you'll be right. Not financial advice. Just got to disclaim that. Jacob's back with his interesting comments. I just can't understand. Yeah, anyway, whatever. I sound like an old man. Just doesn't make sense to me. Gold's still dropping, so I might look for potential entry now. I think we've had a nice little drop. Let's see if we can see some sort of reaction at some point. We might come lower, back down to actually where I was going to put a stop loss. So good thing I'm not in this. Let's see, work it maybe down here somewhere. There would maybe make sense. Yeah, we'll see. Thoughts on GP, JPY, and Swiss yen swing shorts? Joseph, you read my mind. I love those ideas. Swiss yen short, I think, has great potential. Pound yen shorts, I think, has potential as well, but maybe not for as long. We'll have to see what the Bank of England does. But yeah, I think both ideas are great. Now my predicted range on gold. Sure, nice, okay. Yeah, I might go long. I'm actually going to go down to the 15 and see if we can see something happen. See some sort of reaction. It's over an hour and a half. This person's still at it. I don't think it's a person. I think someone has got some sort of bot or some service to do it. Because I'm going to be perfectly honest and blunt. That isn't normal person behavior. I would understand slightly, if someone's doing it for a joke and they did it for 5 minutes, fine, fair enough. You might just be a bit immature. But to make new accounts and come back after an hour and a half and keep doing it genuinely does sound like some sort of mental condition. So yeah, I wouldn't be too harsh on them. I think they've probably either got stuff going on at home or they're lacking a few brain cells and a few chromosomes. So you get people like that in life. Don't talk about Molina coin. I'm still in that one. I've not even checked. I'm in Trump and Molina, and I've not checked since the day after I bought them because I'm just assuming I'm liquidated because it's probably one of the most financially stupid things I've done in a long time. It's 12-year-old for sure. See, I would say so. If they were doing it again, like I said, if they were doing it for 5 minutes, I would maybe say it's 12-year-old, but I don't think so. 12-year-olds are busy these days. They've got iPads, they're at school, they've got Fortnite, they've got all the stuff going on. I don't think a 12-year-old's going to sit on YouTube, a trading stream that he probably has no idea about. So yeah, I think it's probably some 19, 20-year-old that's got a crusty sock in his basement. Anyway, I'll leave that there. I bought Marcus. So to explain, I was on a Discord call with my trader. Literally, I saw the tweet come out of the coin. I called him. We watched it go from $1 to $12. That's a 1,200% return. The whole time we were trying to buy it, I missed generational wealth because Solana was down. And then my order went through and it was way too late. I also got slipped 50%. So yeah, it was a bloody nightmare. But anyway, it's fine. It happens. It's not money that's that meaningful. It's a couple of $100 just to see, what would happen. Finding Nemo chromosomes. Yeah. Speaking from experience, that's not something you need to know about, Sean. Keep my history very private. Anyway, what's euro dollar doing? Still not much. My Chinese trade is not doing well either. Gold, I like the way it's moving. How long have we got? We've got a couple of minutes. I'm going to set this one up to go long. See how it goes. I'll use small position with the possibility to scale in if we start seeing slightly lower. So I might just go in with maybe 123. Yeah, maybe 120, I think is reasonable. I'm going to wait for the candle close though. I'm just ready to get this one going. Yeah, I always like to see a candle close because there's been many times where I'd enter a trade in a really nice looking candle and then it would just reverse as soon as I entered. So that extra layer of confirmation is pretty nice. Yeah, we do, Sean. Yeah, interesting people today. I've got a minute left. Maybe we'll get a trade, maybe not. Actually, I don't know if I've got the margin on this account, to be honest. I've already got quite a few trades open. I've got dollar Swiss, silver, euro dollar. Actually, I should do, maybe. Not sure. Anyway, how long? Actually, hold on. Chris is coming on in about 30 seconds, I think, or his time slot is in about 30 seconds. So actually, I don't know if I'm going to get this trade on time. So I'm not going to do it. I might do it after stream. Sean, you're in the Discord, so you'll see it anyway. Let me just keep an eye on here. All right. Sweet. So Chris isn't here just yet. Christian, I appreciate it. Not going just yet. I need to wait for Chris to arrive, and then I'll let him take over. Financial juice is quick. I mean, it's not millisecond quick, but it is quick enough for you to be able to react as a human. Yeah, it's fine. I think you can pay. I don't know if that actually speeds it up though, but yeah, it's one of, I'd say it's one of the most reliable news feeds you'll get. The market seems to be advancing in 2025, or could call it upgrading like a robot. Sure. I mean, it's an interesting way to describe it, but yeah, I guess you're not too wrong. By Naz. Let's have a look. Time frame. So you're in from, actually, let me just. Right, what did you say you were in on? 217. Here with a stop, sorry, a profit at 218. Oops. Yeah, I'd say that's scalping. I mean, it's not really a day trade, is it? You're looking for what is that? Yeah, very, very small move. It looks fine. I think you'll likely take profits on that, but yeah, I would call that a scalp trade. Sold your own knock. Nice. I was looking to short dollar knock last year, but that trade didn't come through, so I've sat out of it. But the idea is still there. I think the knock is pretty undervalued, really. Learn from Donvo. Yeah, definitely. Donvo is my spirit animal. Oh, wait, hold on. Need to buy gold. Give me a second. Let's go in with 3. I'll actually go pretty tight here. I'm actually going to go in with 5. We'll do that. All right, really small position just to be on the safe side. And then if it doesn't work out, I can go in again. If it does work out, then I can scale in. And we'll see how that goes. Why is this? What's going on? Hold on. Yeah, okay, the order did go through. Sweet. Stop loss didn't move though. So I'm just going to put it here. I've only got 66, well, actually 84 pounds on the line. No big ball of stuff yet. So yeah, we'll just see how this one goes. Anyway, guys, Chris is here to take over the show. So I will love you and leave you all. Thank you for being here. Chris, if you're watching, just a fair warning, there's some idiots in the chat. But yeah, guys, don't get margin called. I will see you tomorrow, I think. Have a great day. See you later.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Looking for some directional flows to the upside today. We have no major U.S. news. We had our unemployment claims come in this morning. Bank of England did cut rates by 25 basis points. We had a 0 to 9 on the Monetary Policy Committee. Unemployment claims came in slightly higher. Prelim for non-farm. I mean, really, non-farm is a big event tomorrow. About 60% of our week is Thursdays and Fridays highs for the week. So I would imagine that if today is going to be pushing up towards highs, tomorrow is either like the poke to those highs and then a fall, or non-farm continues to deliver like a higher high if the numbers come in solid. But no major news coming out for later this morning other than, I mean, that's low impact, but natural gas storage, if that even matters. Otherwise, I'm looking for the flows to continue to kind of grind up towards, and it may be today, tomorrow, but I'm looking for the flows to be relatively stable and positive towards 6,100 on the SPX and the 610 handle or so on the SPY. So this level is continuing to swell for the morning. And I'm just in a couple of bull put spreads here below the like 60-30 zone on SPX, and essentially staying up. We can get up to 610 or so either today, tomorrow. Same thing on SPX. If we can just stay relatively calm and chill today, and maybe make a late afternoon push or even late morning, this is fine. Like late morning push towards like 6,100, and we'll see what happens. So I'm just sitting on a couple of those trades. Overnight, we had some earnings. Let me grab my earnings look. So overnight, we had Ford, Qualcomm, ARM, Symbotic, O'Reilly, Aflac. This morning, we had Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey, Bristol-Myers Squibb, Yum Brands, Philip Morris International. After close today, we've got Amazon. So talking through some earnings today. Ford took another hit to the downside, which I'm not sure if they missed on earnings. They didn't, but apparently stock market doesn't like it too much. Qualcomm actually had positive guidance, and we had earnings top and bottom were beat. We had a gap lower towards like 165, and it's now back to 169. I think I took a I thought I took this on both sides of the trade. Let me find out here. I think I took a trade on Qualcomm. This one might be out to next week, though. Yeah, so I'm looking for a move down below 160 or move back above 182, and I've got this out to next Friday. So that's the earnings play for next week. O'Reilly, I don't think had a huge move. This stock is surprisingly bullish. I mean, it's a $1,300 stock, which is kind of nuts. We did have earnings. They missed on EPS, but beat on revenue, and a little, flash low. I mean, I don't want to call the top here, but I can't believe this stock hasn't split at $1,300. We'll see. Anyway, that's O'Reilly. What else? Aflac. surprising move to the downside on Aflac. We were at 107. Now it's only down to 103. It's not a huge mover, but curious if this is dragging like Progressive or Chubb or any of those other insurance companies down, and it's not. So that's Procter Gamble, my bad. PGR is Progressive. PGR still came back off that little, the California wildfires, LA area, like that was the big scare on insurance, and they bounced back really nicely. CB, same thing, bounced back really nicely. I've got some ratio spreads on those. Those to me are looking pretty good. Going into the morning, Eli Lilly had earnings today. Move was somewhat quiet. I mean, we had it's only moved up about $17, which even for like a small percentage, I think I was only looking for like a 5 or 6% move, and I don't even think it gave us that yet. So I'm glad I didn't force a trade on Eli Lilly. Roblox had a big gap. Wow, that's a big fat gap to the downside. For a $75 stock, gap down $10 or $11. That's a pretty big move. I tried to price that one in. I just didn't get the trade that I wanted. I didn't take it, but nice to see some direction. COP, pretty quiet move. Peloton, what do you do with an $8 move? Nothing. Or an $8 stock. I just would stay the heck away from it forever. Peloton was a fun COVID trade, and that's about it. Hershey, 152. Down below a 5-period yearly moving average. Looking at let me go to the daily chart here. Hershey, if we come back into like COVID lows, I'm probably interested in looking at something there. Let me see the Ivy rank on Hershey. 50, about 50, 49.9. Probably not enough IV to say, yeah, I bet the premiums aren't that great. If I looked at like a COVID level, like 110, probably nothing here that I want to really trade, but let's find out. 43 to 50 days. Yeah, those bid prices don't even fill in on the put side, so never mind. Bristol Myers Squibb, that's BMY. Big indecision level. This one I'm interested in maybe doing some trades on if we come down to the low 40s. Until then, I'll wait. Yum Brands had a nice pop to the upside. People be loving their KFC and A&W and whatever else Yum Brands has. What else is Yum Brands responsible for? Is it Taco Bell? Oh yeah, people love the Taco Bell pizza. Is it Pizza Hut? I don't know. It's KFC, Pizza Hut, or KFC, Taco Bell for sure. There we go. Shines after Q4 earnings beat, fueled by Taco Bell and KFC growth engines. Why go to the grocery store? You can just get food that makes you have diarrhea. Anyway, Amazon earnings aftermarket today. I've got an earnings play in. I've done some rolls on the covered calls that I have. So Amazon hopefully is a decent, exciting move out to next week. Then we have some ELF. I think that's for cosmetics. That's been down. Let's see here. Affirm, Microchip, Pinterest, Powell. That's pretty much wrapping up my week for earnings. So that's earnings for now. All these yellow boxes I have some exposure in. Next week, I have some trades that I'm looking at taking as well. Shopify, Zillow, perhaps, depends on how it prices out. Cisco, MGM, Wynn, Casinos, Palo Alto, DraftKings, Coinbase, Airbnb, Alibaba. Looking for some earnings action there. Okay, let's go to the top. We had a slight gap up. We're fractionally higher this morning. SPY is up 0.13%. Equal weight, bit of a nothing burger. Let me go to the daily time frame here. So just hanging out. Non-farm again tomorrow. Futures market today. This is one thing I'm looking at in the futures market. Right now, my ES feed and my NQ, so ES for S&P and NQ for NASDAQ, as long as we are staying above this trend line, okay, this trend line here, so support, let me change the color. As long as we have support in here, then this market is hopefully going to continue to grind higher. My concern is that we have this recent high, if we turn south, then futures-wise, I may be looking at a futures trade to the downside. Okay, so I could see today being sideways, just because the big event is tomorrow. So is tomorrow going to be, upside move, or is it going to break structure and break the trend line? Futures might be pretty quiet today and tomorrow going into non-farm payroll, and then that's the major catalyst for, the weekend, Friday into next week. Okay. So anyway, as long as this trend line remains intact, I'm still, mildly bullish / cautiously bullish on the markets right now. Is this, the deep seek was pretty much a gap fill. So here's your, was this deep seek? Yeah, that was the Sunday night futures deep seek move that then Monday through Thursday, Friday, the entire week was, there's your deep seek low. Market spent the whole week pulling back, and then we have our tariff talk. We gap lower for tariffs. We spent the entire week pulling back. So that's what I see. It's like we're either just hanging out here, just clawing the, fighting the good fight, climbing the wall of worry type thing, but we might struggle to get to all-time highs or make any convincing break above them. Okay, there's a lot of indecision today, which I think it's fine with non-farm coming out tomorrow. Yeah, that's kind of about it. And then looking at the more intermediate trend line there, same type of thing. Just waiting to see how price goes. We'll go Qs up 0.2%, equal weight up 0.18. The Dow's red today, Russell's up fractionally. VIX 1 day is actually down. VIX has been down. So the last, 4 days? Other than Monday's open, VIX has been down every day. SPXY kind of staying steady in the middle. Dollar index, a little bit stronger on the day. Oil, 71.18. Oil futures, 71.22. Natural gas up a little bit. This helps my UNG position. I think I'm up a few bucks on that one right now. UNG. What's the overall position here? UNG overall. Up around $1,200. So this is not like a time sensitive trade. I'm looking to see if natural gas is getting into this buy zone on the daily time frame, if this is enough to stay above the buy zone, start to see higher lows and higher highs. And I've got an income trade to the $23 and $24 mark. Okay. Arthur, I'm doing well. How are you? Gold. Everyone's favorite. Pile in on gold. Okay. Why am I not buying gold? I showed yesterday in my charts, we have a lot of hidden bearish divergence. I'm not calling the top on gold. I'm not shorting gold, but I'm just waiting for some type of pullback or dip. And that pullback or dip could be subtle. It could be a pullback to the previous all-time high. It could be a pullback into any of these dynamic moving averages. But the bar count that I'm interested in is I think we're at 300 plus bars, maybe more on gold. So let me check that really quickly here. Last time we tested the moving average was October 2023, and that puts me up to around 338 bars, which is comparable to what you have in the S&P. So anyway, I'm just going to be patient, waiting for some type of pullback, some type of pause. If it's a subtle pullback there, that's fine. Resistance becomes support. Maybe there's bid. Pulls back into, this is a 21, 50, 100, 144, 200 moving average. Any of those pullbacks, I'm looking for a close below, close above to reestablish longs. Not terribly difficult, just probably the hardest part is being patient. Gold futures, same thing. If I get some pullbacks into here, I would be happy to put on some gold futures trades, but I need some pullbacks first. GLD, I've got some credit spreads. I've got some shares. I'm just enjoying this run like everyone else. I'm just not heavy in gold. Silver, a little bit of a pullback. These recent highs at 32.57. I think silver still looks good to the upside towards $36. Silver futures, this one looks good. I had a trade from Q4 that closed out early January. Same thing, just kind of out of the way, closed out for about 560 bucks. SLV, if we have any dips or pullbacks, credit spreads, I've got some diagonal spreads running as well. My target's up here towards $33 to $35. Bitcoin, still a lot of volatility, not making really convincing direction either way. I could see Bitcoin going sideways for a little bit. We had a long accumulation phase in Bitcoin last year before we had that kind of pre-election run. And then, of course, election went nuts. But we could do something pretty similar where I would want to be careful on Bitcoin for this, though. If this is some type of resistance that potentially could be a double top, if we break below 90 convincingly, then we might be, this resistance, measure that move, There's your measure move, and then we find some efficiency down here. But this is why I keep saying like the 90K to 80K. I still like adding and adding. Longer term, I like adding to Bitcoin. I just want to see some pullbacks. So all your, exposure / correlations, IBIT pulling back a little bit. I have some credit spreads in here. I'm looking to see, if we pull back towards like $50 again, I'll probably add some more credit spreads in on IBIT. If we get a gap fill, I will certainly be adding some credit spreads in this like, $46 to $43 zone. MicroStrategy had earnings in awesome fashion. They just continue to miss like crazy on earnings, but nobody gives a crap because it's not really trading like a tech company. It's trading like Bitcoin. So there's clearly some resiliency here, even though they had a miss in revenue and a miss in earnings. But yet they're like, well, they do have, 130,000 Bitcoin. So that's good, right? So the market just treats it like it's Bitcoin. Leverage Bitcoin, but it's still treated like Bitcoin. So there's resiliency baked into this. I'm looking at an income trade. Hopefully it stays above 310. If it doesn't, my break even is 279, so I can continue to sell premium. But hopefully it just stays where it is, doesn't have any crazy flush lower, and I'll get called away for about $30 a share, $31 a share. Coinbase, we have earnings on Coinbase coming out next week, I believe, on Thursday. That'll be something I'll be watching. Ethereum got hit pretty hard over the weekend, and I'm glad that I'm out of Ethereum for right now. Japanese yen, I'm liking this a lot, actually. So my 6J is my Japanese yen futures. And I saw somebody on one of my YouTube video comments was like, this guy's crazy. Don't ever listen to him. He says he's not going to trade the Japanese yen, then he trades the Japanese yen. Oh my gosh, call me a trader. What I said is I'm not going to trade Forex for the Japanese yen, but I would be willing to trade the futures market because it's way easier to trade. I can go out in time. I can have defined risks. So the Japanese yen can do the dumbest things and I can still have a line in the sand. And so I'm long with a bull call spread on Japanese yen futures. And I'm currently up around $1,900, almost $2,000. And hopefully more to come. I mean, I've got this on a little bit of exposure for almost all my accounts here that can trade futures, which I think is like all but one. I have one like pure cash account. The other ones, even with IRAs, I can trade futures. So there's time in the trade, but point is, if we are going to actually make a break for the buy zone or get back to this recent high, I wonder if we're actually building in some type of bullish pattern. Okay, so I'm out to September on this trade. It's not really time sensitive. So my 6J is not super time sensitive, although it is September, so it's limited to how far out I go. But FXY, I actually own shares, and I bought shares around $58. And I'm still going to keep those shares because I think that this is probably the easiest way for me to have some Japanese yen exposure. And if we see a big move on the Japanese yen this year or next year, then even taking this from like 60 to 68 or 60 to 70, I'm still happy to make some bucks on that. Okay, so I think I have a few hundred shares of FXY. Let me see. So FXY right here. So 1, 2, 3, 4, I have 450 shares. So if I get a move from, so I own it around 58. I think that's my break even. Yeah, 58.62. So let's just say I get out around $70. Okay, so $70 minus 58.62 is 11.38 a share, 450 shares. So I'll make $5,000 on FXY. Just a bit of a, it's not really a hedge. It's just, I think there's going to be some Japanese yen strength. I think at some point we have either more intervention, more Japanese yen drama, something breaks, market goes into a risk-off tone, and the Japanese yen gets really strong. But the one thing that's also helping kind of aid this is the Bank of Japan is not making it nearly as attractive to hold in like negative carry, right? So they've gone from negative 0.1% to 0 to 0.25 to 0.5. They keep raising rates, and I don't know if they're going to keep raising rates. I think they're going to still be somewhat accommodative to keep this market resiliency. But if they go to, 0.75 or 1%, that makes this carry trade way less attractive. And similar to what we saw back in July of last year, it is very possible that when the deleveraging happened last year, that was what it looked like. So another wave of that could happen very, very quickly. And that is why we saw pretty much every yen pair drop a ton, right? And we're still wondering, like, is this Japanese yen going to get stronger? I don't know. I still think that the dollar yen could do something like this, where we have high to high to high to high, and it gets back to the same high again, and then this structure breaks. That would be more like a range trade that I would get my Forex accounts behind. Okay, but that if it's either that type of like, slow build to the tops again, and then we're talking about more intervention, which is so difficult to trade. That's why I said I'd rather own FXY and trade Japanese yen futures, because it's so hard to be a Forex trader when you don't know if the Bank of Japan has to intervene in your favor or not, right? I'm so surprised over the last couple of years that an intervention didn't look like a 500,000 or 500 pip flash crash to the upside and then it dumped. I mean, consider yourselves lucky, because usually a flash crash move is not going in the direction that's counter trend. Usually, a flash crash move is what flushes out everybody and then reverses. So anyway, either this market keeps grinding higher until that structure breaks, or we are going to work our way down into this low and then have some type of head and shoulders pattern that maybe pushes us to fresh lows here. That'd be the head and shoulders pattern. So I'm watching the setup, but meanwhile, I'm going to stay. Like I said, I'm going to stay with my Japanese yen futures position and my FXY. That to me is the easier way to trade it with a lot less funny business. No, somebody said it. It was a comment, and again, it's probably like Forex pricing or whoever some guy that I lost it on one time where he was just like, you're an idiot. And I'm just like, no, you're an idiot. No, it was in my YouTube comments where he just said something like, don't listen to everything he says, take it with a grain of salt. I'm like, okay, I guess you didn't listen, because I just said I don't want to trade Forex. I just think it's ridiculous to think that traders know what a Japanese yen intervention is and when it's going to happen, and relying on the Bank of Japan to get you on the right side of the trade, when I'm like, I don't have to pay any negative swap or any negative rollover by holding a Japanese futures position that is a defined risk options trade, or trade FXY, which is owning a share that I pay nothing on other than if price goes up, I make money. That to me is a no-brainer. That's so much easier than trading Forex for Japanese yen. So anyway, just thought it was funny. All right, let me check in a couple of trades this morning real quick. I've got some SPX trades running. I'm just watching price on my other side here. So the dollar's down to 70 cents. News at 10:39, nothing crazy. Like, what the heck's going on? There's just a lot of back and forth price action today. All right, let me take a quick peek at futures. Okay, futures is starting to dip just a little bit. I mean, we're not breaking the trend line or anything. I'm just going to keep an eye on this. A little bit of a gap fill this morning. Let's see what happens. Flow wise, let me check my SPY this morning, see if that continues to swell towards the 610 handle. Okay, a little bit lighter. Yeah, we just have a lot of indecision so far today. See if we can get back to like the 605, 606 level. All right, let's keep going. So that's Japanese yen. The DAX, you've got to be kidding me, man. We're at fresh all-time highs in the DAX. This index cannot be stopped. It's impressive. I hope nobody's trying to short this thing. I don't know why the German DAX is doing as well as it is. It is outperforming the S&P. I mean, since this dip we had in August, I'm pretty sure this has performed better. So that's up 28% since the August dip. Let me check the SPY. 28% in the DAX and about 18%. Wow, that's a pretty impressive outperformance. 28% in the DAX and 18% in the S&P. So it keeps rocking and rolling. The FTSE also up to fresh all-time highs. I don't know if that's because the BOE just cut rates this morning. Marcus seems to like it. Yep, nicely. I like it. Ride that thing. Argentina, sideways. I'd like to see some dips or pullbacks, or these moving averages catch up to give me a more dynamic level to buy support. Just going to wait on that for right now. China, a little bit up on the day, 0.05, nothing crazy. Here's Brazil, looking better. I own some shares of EWZ. Apple, still fighting the good fight, bounced off the 200 moving average. I sold some premium on that with some ratio spreads. Amazon has earnings tomorrow. We're going to blow through earnings, maybe get up to 250 to 260. Or if we miss earnings, we could have a aggressive move lower towards 222. Google, big drop yesterday. Even though they had a slight miss in revenue, they beat EPS. It's not really a big enough pullback for me to say I'm going to buy Google or do anything with it. I wouldn't mind, adding in some exposure there at 190. But if I were to buy it here, I would have to be willing to take it down to probably 175 and down to like 150 as well, realistically. Um, do I love that? I mean, if I bought Google at a 9% discount, could be fine. If I bought some here and bought some at a, let's say, 18% discount, could also be fine. The concern, of course, would be that we don't keep going higher. I mean, longer term, sure. I'm sure Google's probably fine longer term. Probably totally fine longer term. But I didn't really want to mess around with the ratio spreads. I got a bunch of those already scheduled out. When we had these lows, I started putting in like there's March, there's May, there's December. I mean, I'm like literally doing like option leaps, defined risk trades on. Well, it's actually not defined risk. It's more like I'm willing to own the shares with ratio spread. So I put in levels that I'm interested in owning some shares. I'm just trying to think, are we going to get to all-time highs again? Yes, no, maybe. I'm not really sure. So do I love Google? I mean, it's of the Mag 7s, it's actually like the cheapest one. because of the split they had back here, right? Where we had the 20-for-1 split. I mean, it did make Google pretty attractive. So we went from that 20-to-1 split around this price point. It was trading around, let's say, I don't know, $2,000 or something if it was a 20-for-1 split. And I was trading at 190. So the stock price has still appreciated quite a bit since the split. It's up around 80%. Again, not bad. But question remains. So here's the deal. If I put in $1,000 on Google right now, I've got to be willing to throw in probably another 1,000 in here. So if I put like a 3K position in, that's not a big allocation. That's probably less than 1% for some of my accounts. But 1% of Google with potential gains above. I mean, I think if you give this stock 5 to 10 years, we're probably talking another stock that's up to $500 to $1,000. You just have to give it time. Okay, so do I mind it? No. If we're still talking AI and CapEx spending, I mean, it should be okay. I don't know, and I don't know who's winning the arms race right now. I would say Meta's probably the one that's like getting the most street cred for like how much they're positioned for AI gains, and they're just a freaking cash cow. Even though they lose money in their metaverse, like billions of dollars, they still make so much money. It's ridiculous. Microsoft. I mean, if Microsoft wasn't so darn expensive, I think Microsoft is a better technical position than Google, but Google is just cheaper. So I don't mind Google. I think the only real issue would be like government probes and antitrust, and I don't know. I mean, do people use DuckDuckGo now instead of Google? Is anybody still using Ask Jeeves? So, I mean, I just watched the movie last night. It's like everything when it's like people on the computer in a movie, a little segment in the movie, it's always going to Google. Is that product placement? I don't know. Anyway, I don't mind it. It's about a 9% discount. So do we hit fresh highs on Google this year? Yes, no, maybe. I think we can get back up here. If we put $1,000 into it, I make a whopping $80, right? Like not a huge return. So it's not like I'm making money hand over fist. I mean, option trades is going to help me make a lot more money. I just don't like the prices that it's at. So this would be more like stash it away, throw some dollar cost average positions into it. And again, I don't know if Google's better positioned, maybe Microsoft. It might be easier if I just do this discount. Microsoft going up 12% maybe looks a little bit better with all my ratio spreads out here. So I'm going to do this. I'll give them both a chance to run. I'm going to throw $1,000 into Microsoft at current prices, and I will throw in $1,000 on Google at current prices. That's more just like stash it away type move. Nvidia looking better, right? Where we've got some gaps to the upside. We're still just chopping around this 200 moving average. I still think there's a gap fill potential. We've got earnings out towards the end of the month. I do have an iron condor, which is still looking pretty good actually, even though it's a bit volatile. But if we get back into the center price, that one's looking okay. All right, let me keep an eye on SPX this morning. Okay, don't fill that gap too aggressively there, SPX. Futures market. So we've got S&P making some fresh lows. NQ making some fresh lows. Come on, just give me some chop suey today. That's all I want. All right, anyway, let's see. Google and Microsoft. Throw in $1,000 on each. So it's not going to buy me a ton of shares. It's not really, it's more just the dollar allocation. So if I do $1,000 at 416, I'm buying essentially 2 shares. So I'll buy 2 or 3 shares to kind of start off. So what's 1,000 divided by 416? Buying 2.4 shares. I'll buy 3 shares. So Microsoft, I'll buy 3 shares. So long the stock, 3 shares is going to set me back about $12.50. Okay. So let's get some action there. So 3 shares filled. Taking the 3 shares on all accounts. Okay, just give me a second to get these all filled. All right, so just did an allocation there around 416. I'd say I'll just put the break even and let me look at all of them here. So anywhere between like 416.69, 416.60, 416.57. I'll take the high end of that, so I'll just go 416.69 for $1,000 allocation. Add that into the pulver alerts. That will be a little dollar cost average position. So new trade, Microsoft, 1250 allocation at 416.69. Small percent allocation to own. Looking for MSFT to revisit all-time highs in 2025, 2026. I'll continue to monitor, and I'm willing to dollar cost average in at lower levels. Okay, lower levels, that would include, I mean, I would say the next level for me would be like 340. That would be a pretty hefty discount. If we went all the way down there, that's about a 30% off trade, which for this stock, I wouldn't mind at all. I'd say 330. Lower levels, 330. 330 to 350 would be my next zone. If we get back to all-time highs from current price, get back to all-time highs, we're looking at about a 12.5% run. 12.5% move up, revisits all-time highs. Okay, that trades in. So that is a 1250 allocation at 416.69. Okay, and then on Google, so this one's sitting off all-time highs with that quantum computing stuff. Again, I'll probably put 1,000 on this one. So 1,000 here, a gap fill, and a revisit of these lows, that would be area 3. So 1, 2, and 3. The nice thing here is I can put in these levels for 1,000 each. So I could go 1,000, 1,000, 1,000, and that would be roughly current price. And then this would be around 160 or so, 176. I'll put 176. So we'll put 191, 176, and then a low at 150. 150. So 191, 176, and 150. Okay, so I'm going to start off with another $1,000 allocation. So about 5 shares on Google. Okay, so 5 shares. Everyone getting in on the action. Let's give me a moment to get through these. Come on. Let's go 75 maybe. 190.7071. All right, just fill my order. There we go. Okay. And there. There. All right, 190.71. $1,000 allocation at 190.71. Small percent allocation to own. Looking for Google. To revisit all-time highs or offer additional dollar cost average levels. Level 2 at 176, level 3 at 150. And those will be pending orders. Ah. There we go. Okay, those are in. Google and Microsoft. I'm still in Forex. I've got a ton of positions. I've got like 70 open positions in Forex. I'm building on mostly Swiss pairs. So my Aussie Swiss, I'm still long. I probably made, I don't know, $20-some thousand last year on just carry trade. and I closed out my dollar Swiss positions for almost 10 grand. So I mean, I'm still in Swiss. I'm still in my dollar or my my Forex positions, but I'm a position builder. I use Forex as like a 3 to 6 month or 12-month investment vehicle where it's like I find a good trade, I take a good trade. So I've talked about this a lot. I review this stuff a lot. Why am I long Aussie Swiss? I get positive swap. We're sitting here at these like basically all-time lows. If all this does is, range, that's fine for holding, but I'm looking to see if we have a swing. So low to high, higher low to higher high, that profit is good enough for me. So that's all I'm looking for is like, I'm going to hold this thing based on a swing. CAD Swiss is looking better. I got a ton of positions in here. This would allow me to be profitable on everything that I'm having for CAD Swiss. If this is a swing to symmetry and there's potentially a fifth wave, I might hold this for either profit target here or profit target here. 66 to 66.50 is a big profit level, but ideally I'd like to get to 7,000. There's a big pocket at 7,100, but it's obviously been sideways. So I'm mostly enjoying positive swap. I have dollar cost average into a ton of these, and I'm just being extremely patient, like extremely patient. But this is a monster pocket back here. We also have a major level of past support in this area. So if we can get out of this choppiness here, then I think we have a 5-wave move coming back to like 6,700. And again, I have like 30 positions open. So if I'm right, I'm going to make a lot of money. So I don't just dabble in Forex. I mean, I freaking trade Forex, but it's like I don't get in the market every single day because Forex is noisy. It's a noisy market. I don't scalp anymore. I'm mostly just a longer term trader. But my, Euro Swiss, same thing. Got a bunch of positions here on Euro Swiss. Dollar Swiss was one that paid out really nicely at 9,200, and we're trading at 90.50. So I'm just waiting. But I stacked in, 30 some trades or close to 30 trades over this window, and then closed out at 92. Initially, I wanted to go much higher than that, but because we had so many legs here, I just waited and added on trend lines and added on equal lows and ended up making like this position here was every position profitable. Okay. Do you know what percentage of your total yearly profits are? I mean, it's less than it was. I mean, I had an $8 million currency fund that now is over into it's over into stocks, options, trading more stocks, options, ETFs, things like that. It's just easier for money management. For me, like managing money on the stock and option side is way better than managing Forex. I just say that because you got to deal with flash crashes. You got to deal with, just stupid crap that happens. Like, hey, my robots got disrupted because the broker changed the service on me. Like I've dealt with that for years, and it's just like enough. I've had enough of it. I had too many accounts linked up where it's like one server change for my broker and my master account means that I've got, 20 accounts I had to go in manually and change all these positions and update everything. It's such a huge inconvenience. I just got tired of it. So, and I can't trade with defined risk like I could in trading options. But anyway, percentage of profits. I mean, I still make really nice chunks of profit in Forex, but I mean, last year I made like 400 grand, and I would say about 30,000 was Forex ish. So it's it's just because I have a bigger pie now in stocks and options and the bigger brokers versus just trading Forex. But look, I still love Forex. It's a pure technical market, which is why it's always near and dear to my heart. But the way I've made the most money consistently is not by day trading and not by scalping and not by over leveraging. It is by finding huge levels on huge time frames and building positions very small and building them up to a position that I'm happy with, like literally building, micro lots into mini lots into standard lots, and then taking the chunks of profit when I add to my positions and make my winners much bigger. That has helped me be very consistent for the last, probably close to 12, 13 years now. I've traded Forex since 2007. I day traded for a couple of years. I was scalping. I was, aggressive. And then I got into just much more position trading. And for the last, decade plus, it's been really consistent. So it's not easy though. And it's not for everybody. It's like most people are so impatient that, I want to swing trade. I want to trade on a 1 hour chart. Then good luck. You can make it, you can do it, but that's not my style. All right. Anyway, but I'm still in a bunch of positions on Forex trades. They're just waiting. I've just got some positions built. I'm literally long against the Swiss on everything except for Swiss yen is not a big position. That is this trade. So I'm up a little bit on euro and Swiss yen, but this is just like a single swing trade. Everything else, I just have stacked positions in my MT4 accounts. Like I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, long Pound Swiss, long New Zealand Swiss. I'm not in dollar Swiss anymore. Also, my dollar CAD position I closed out for profit, and that was the run from 34 up to 45. So I got out of that trade for a nice little win on like 10 positions, and then I'm just going to wait. So it's mostly just hanging on to Swiss pairs right now. That's it. And I'm fine with that. Even though I have like 60 to 70 positions open, I'm fine just sitting and waiting. I get positive swap. Price isn't really doing much. I don't have to check it other than maybe spot check it here and there for the day or the week. I can check my MT4 app. I can look at my broker platform once a week. Nothing crazy. So pretty simple. To me, it's simple. But you got to have the patience to sit on trades for, 3 to 6 months and not worry about it. But that's what I'm saying. Most people don't like to do that. Most people are like, I've got 2 to 1 leverage. I'm trying to make, I'm trying to take $1,000 and turn it into $1 million. How do I do it? One bite at a time, I guess. All right. Anyway, what else do we need to talk about? It's 11:03. Let me check on my SPX positions. I just want to see if I've had some decay. I haven't hit my profit target yet. My dollar's still trading at 97. What a sticky trade today. Iron Condor would have been a good trade. So anyway, I'm just going to wait a little bit longer. Hopefully it stays around that like 60, 75 zone today. Let's see here. I did oil, I did gold, I did silver. We did Bitcoin. 10-year is up a little bit today, 27.27%. The dollar's getting a little bit stronger. I mean, this has been a decent decline. More information needs to come out here, but looking at this third-party inflation gauge, we did have a nice big drop to the downside. It would be lovely to see that through February, as we get to CPI and PPI and PCE, which is usually the end of the month. Probably if it's not this week, it should be next week. So we have non-farm this week. What's next week? We actually have CPI lined up next week. Yep. So we have US CPI on the 12th, and then we should have what's this? Yep. So we have PPI, CPI next week on the 12th and 13th. That'll be in another important like inflation reading. What's headline CPI, what's core CPI, blah blah blah. So we're going to get more inflation news. If this is anything that's showing some accuracy, perhaps we are going to start to see that it's printing lower. So if the market is looking at hitting all-time highs, improved inflation data might help. Okay. So just food for thought and can this market go higher? Of course. It's almost a scary amount of optimism that's baked into the market. The Fed is likely not doing anything rate-wise. Somebody said yesterday the Fed's going to cut in March. Not from what I see. I think right now it's like the Fed would only be willing to offer a cut if we see, and I don't think a 1-month data point is going to be enough to justify the Fed cuts. Look, the Fed has already cut 100 basis points. I think the probabilities right now at the Fed are about accurate. I mean, this is designed to be a transparent tool that the Fed continues to drip this information in the market. The market's anticipating a rate cut coming in June of this year and then in December. Okay. Now, what's interesting is yesterday, I'm pretty sure I looked at this either yesterday or earlier this week, and for 2026, the market was looking at maybe one more cut, but instead there's 0. So if we cut in June, cut in December, this is looking at 0 cuts through 2026. So if the Fed gets down to, let's put them at like 3.5. 3.5 to 3.75 would be their cash rate window. As long as we see, let's say core PCE, as long as core PCE is less than, I'm going to say 2.8, okay, that's still considered pseudo-restrictive. But ideally, I'm thinking that PCE and core PCE probably wants to get less than 2.5. And I don't know if this is like the target. They're saying 2%, 2%. I mean, is this a target? Core PCE has to be 2%? Or is it headline CPI? I don't know. But even if they cut rates over the next, 6 to 12 months, this is about as low as they're going right now. Now, where would the Fed cut more? Recession, right? If we saw a nasty, break in the markets and the bond markets rip higher, the equities market drops, then the Fed will probably have a plan to cut rates within a 6 to 12 month window. Would be a little bit more aggressive because rates would plummet, right? Bonds would rip higher, yields would fall off a cliff. and the Fed would have more ability to possibly cut, which again, it's a one-dimensional play that they have. It's not the best thing. I don't know how bad it gets, but in order for the Fed to be really aggressive on cutting rates, they would have to have, a recession. That we'd have to have a terrible phase in the market where things drop hard, things drop fast, and then the Fed would be willing to cut and kind of backstop and save and add liquidity to the markets. Because right now they are, cutting their balance sheet by leaps and bounds, and they are, things are rolling off the Treasury pretty aggressively. But how much longer do they do it? I don't know. Like they have been slowly tightening for the last year or so, and nobody seems to say like that's a bad thing, right? Tightening means less money and less liquidity overall. And so if they end up facing some type of like headwinds and there's less money to go around, like that's just going to make the exits harder and faster, right? So anyway, that's it. I think I'll wrap it up there for today. I'm going to keep a close eye on the SPX this morning. We have non-farm payroll tomorrow morning. Hopefully today's price action is relatively calm leading into the major catalyst tomorrow. So if it's just relatively chill today, that's fine. Non-farm, either a bump up or a bump down. This is essentially my technical outlook right now. This is SPX high. There's a high. We are making lower highs right now. Okay, is it able to get up to this level? Sure, but is this level defended again and another drop back into this trend line? Or worst case would be if the SPX breaks below 6020 or 6,000, then we're probably coming right back down to revisit. This is a deep seek low. This is our tariff low. This would just be more, more volatility to the downside. And this is the kind of buckle up approach that we talked about. If we don't have clear direction, if the market's not able to regain and eclipse all-time highs with sustained momentum, then expect some highs and lows and choppiness today. Okay. All right. That being said, I'll let you go for today. And talk to y'all soon. All right. Thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.